or you can create multiple trusts. And when you do that, each entity has its own separate EIN, which is very, very important whenever we talk about leverage. The other thing is we're doing business funding. And with businesses, they are established for profit purposes. And so because of that, and they have operations and operational costs, you do typically get access to a much higher limit of funding for business funding as compared to personal funding as well, too, right? Very, very important. The other thing, and this third point is really huge, I see a lot of people using personal credit cards, personal funds in order to build their business, right? And sometimes that can be a little adverse. And so the third bullet point about this is that we teach you how to go and acquire business funding so that when you're investing into the business, that those business debts or those business expenses don't actually report to your personal credit, right? Which is very, very important. And obviously benefits of business funding is to start, grow, or scale operations or investments in the best interest for what you're looking for, right? Now, another common question I get is, okay, this is great. I see the benefits of business funding, but how can I actually use it, right? So a couple different things we're going to break down. Investing. Mentorships is huge. You're a part of a mentorship now, access to information, access to resources, access to solutions. Information truly changes situations, right? So you can invest into mentorships, you can invest in the masterminds, you can invest in the networking because your network really is your net worth, right? So there's a lot of opportunity there. Marketing budgets. Some people may have a business and they're looking to expand that business, right? So marketing budgets can be ads, producing content, creating content, paying influencers or media pages in order to promote your content or your messages, right? Asset purchases. One of my personal favorite uses of business funding is asset purchases, whether using it to acquire other businesses, stocks, or invest into real estate. And then, of course, just operational business capital, right? So operational expenses. Equipment is one I see people miss a lot. Computers, cameras, a lot of that, especially in this digital age, is a great resource that a lot of our clients use for equipment and tech. And then obviously hiring staff and expanding your business as well too. Now, the reason we go over all of this is because at the end, what I always like to ask you in the beginning is how would you like to purchase assets and create cash flow without having to risk your own money, right? Again, the key word here is leverage, leveraging other people's money to purchase assets and create cash flow, right? That's everything that we're going to talk about, which is absolutely possible. The thing is that you have to understand a few key components first, and that's ultimately what I'm going to share with you over the next couple minutes. Now, over the next couple minutes, like I said, about 30-ish minutes, we're going to discuss a couple very important things, right? So the first thing is you want to maximize your funding probability. You don't just want to be able to access funding, and we're not talking about just small amounts of capital. We're talking about $50,000, $100,000, $200,000 plus in capital, especially whenever we start to break this down later. And you want to be able to maximize your funding probability. And you're able to do that when you understand a couple key components whenever it comes to credit report, personal credit report, business credit report, and knowing how to structure yours, right? So that's the first thing. The second thing is that you want to minimize denials and increase the amount you get funded when you know how to properly structure your business. I see a lot of people have businesses established, but they're not necessarily structured the right way, and you want to be able to do it correctly, right? And I'm ultimately going to show you, there's a lot of funding programs out there. We're going to touch base on a number of them throughout this program. But ultimately, I'm going to show you how, in my opinion, how to fund your business in the most efficient way possible, often at 0% interest and minimal documentation in order to do so, right? Now, before we even really get involved into this, I'm a huge person of experience, right? And just shout out to Christina, right? She has a lot of great educators, and I'm privileged and extremely thankful to be one of the people who are here and be able to educate on this topic. But for those of you who are not familiar with me, I want to introduce you to me for the first time and give you a little bit of idea of why I'm even qualified to take any portion of your time or to provide my opinion on this topic, right? So the first thing, my name is Mr. Dorsey. As she mentioned, I am the CEO and founder of the Funding Playbook. You can see a lot of my content on all platforms. If you look down at the bottom right, you can find me at CEO Dorsey. I do a lot of stories. I do a lot of educational content, and we've got a lot more content coming forward, right? So that's the first thing. The second thing is that I'm an expert in credit and funding, right? I have extensive experience in tailored funding solutions for entrepreneurs and businesses. I'm not going to teach you from something that I think might be possible. I'm going to tell you from experience, because I've already experienced the wins, the losses, the highs and lows. And I've ultimately kind of, over the last decade or so, really figured this out. Now, I'm a business growth specialist, right? We do this by getting results. I'm the founder of a 7-figure consultancy. And ultimately, really what we do is we take this really complicated funding matter and we really streamline the process for funding, asset acquisition, and really long-term success, establishing both personal and business credit for all of our clients. And I'm a strategic negotiator, right? I'm skilled in structuring deals and building strong partnerships with banks, lenders, and investors. We ultimately connect the dots in order to provide the resources to fund the opportunities that you're looking to fund, right? Now that you have an idea of a little bit about who I am, I want to talk about the old way, which is what most people are doing. And then we're going to talk about the new way, which is the ideal way to do things, right? So the old way is really taking years of research using trial and error only to really come up with incomplete information, right? You might have a piece here and you might have a piece there, but as I'm sure you know, if you're an experienced individual in whatever you're doing, it's always the nuances, it's always the little things that really make the biggest difference, right? And it's really knowing how to not just trial and error, but really having an exact blueprint to knowing how to get the results that you're looking for, right? So that's the first thing. The second thing is trying to earn and save income to reach your dreams or support your family. In my experience, very generally, most people can fund themselves $50,000 to $100,000 a lot faster than they can save that $50,000 to $100,000. And just to give you an idea of how useful funding is think about the last time you yourself or someone that you know has said something along the nature of, hey, if I had X amount of money, that X amount of money could be $1,000, $5,000, $10,000, $50,000, $100,000 plus, whatever the case may be. If I had X amount of money, I would do X task, right? So they would capitalize on certain opportunity. They would make a certain investment. They would start a certain business, right? Et cetera. And a lot of people get stuck in this mindset where they're going to try to earn and save their whole way to get to those opportunities. And the biggest thing is time. It's the time that it takes in order to do so. And those opportunities could change, right? So the old way is trying to earn and save income. The new way is being able to capitalize on opportunities whenever they arise, right? So the other thing is constantly being denied or approved with high interest rates. You want to minimize those denials. But the other thing that you really want to do is that when you get access to capital, it's also being able to get access to capital at favorable terms so that you can actually make those ROIs or those return on investments for the things that you're doing, right? And it's ultimately, and the other old way is using earned revenue to continually grow back into the business, right? Your business is growing, you have revenue, but you're having to take all of that revenue and invest it all back into the business, which again limits your opportunities that you're able to capitalize on. Now, the new way, however, is empowering yourself with financial education, right? Information and education changes situations. I'm going to repeat that a couple different times as we go through this, because you really want to be able to empower yourself by going through this process. The other thing is really having an expert level understanding of the banking system to acquire high limit funding, right? Everything is methodical and every small piece of the puzzle matters so that you can get to the overall result that you're looking for. Ultimately, the new way is leveraging other people's money, just like we've been talking about this whole time, to build wealth, purchase assets, and create cash flow. And then ultimately, the new way is having a much higher status with banks in order to use them as tools or assets for your business, which is some of my favorite tools in order to do so. Now, as we go through this process, we're going to talk about who this is for. And then also, as we talk about who this is for, we're also going to talk about who this is not for, because we are going to talk to you about getting you high limits of capital, right? High limits of funding. So this is useful for a couple different people, right? In order, the startup entrepreneur who is ultimately overwhelmed, they have all these ideas, they have all these opportunities, but they're overwhelmed with how they're actually going to fund and grow their business and capitalize on those opportunities, right? So the startup entrepreneur. Number two, the business owner who is generating some revenue, but they're tired of using their hard-earned money, right? Earning some revenue, but having to put all of that revenue back into the business in order to capitalize on opportunities. Number three, the successful business owner who is already generating 6, 7, even 8-figure even 8-figure business owners that we work with, who ultimately just want to increase their buying power to create more leverage. And ultimately, this is really for people who love purchasing assets without having to risk their own money, right? Now, while we talk about who this is for, we have to talk about who this is not for, right? Because we're going to get high limits of capital in order to leverage and invest in our best interest, right? So who this is not for, very important. This is not for people who are possibly thinking about starting a business or just like the idea of funding. You must already have a goal in mind, an opportunity, or a business started in order to access capital, right? Especially with us. Number two, this is not for people who make excuses and complain. Although we gonna simplify this down really, really simple and give it step by step, there is some action that takes in order to set this up. So it's not for people who, are just who just want to make excuses and complain. This is not for people who just want to learn information without being prepared to take action and get results. We're going to give you great information. We're going to give you applicable information, but we want you to be able to take action on that information, right? And number four, this is not for people who are not serious about receiving an additional 6+ figures in funding for their business. Now that we've got that out the way, now we can actually discuss the foundation and key components of what it actually takes to get funded. Now, there's a couple of different things that we're going to break down in this. We're going to talk about business funding. We're going to talk about business credit. We're going to talk about corporate credit. But the foundation for most people, again, this is very general information. Everybody's situation is a little different. But the foundation for most people in order to start building business credit and start accessing business funding comes down to understanding the personal credit report as the foundation to accessing capital. So the reason I say this is because there's two reports that we talk about. There's the personal credit report, and then there's the business credit report. Now, a couple of different things. When we're discussing these credit reports, you're going to maximize your funding probability and your opportunities when you know what a good credit report looks like and how to structure yours. So the very first key components here is all of your information must line up exactly across all credit reporting agencies. Now, the ones that we're going to discuss as the foundation, there's three. There's multiple credit reporting agencies out there, especially when it comes to the personal side. But we're going to talk about three of the main ones. Those are going to be TransUnion, those are going to be Equifax, and those are going to be Experian. Now, contrary to popular belief, these companies are individually privately owned companies, right? And so the reason I'm saying that is because just because one company reports information does not mean that all of the other companies are going to report that information. And it's very important that all of your information lines up exactly across all of the credit reporting agencies that we're going to use in this process, right? Number two, one name and one address for instant approvals. This does include employers, right? Addresses don't really affect the credit score, but they quote unquote show how stable or how often someone moves around. Same thing as an employer. When a company sees just one or very few employers, they make the assumption that this client or this individual has a more stable job instead of always moving around, right? So there's certain nuances that don't necessarily affect the credit score that matter as the foundation whenever it comes to getting funding. And number three, the reason we go over all this is because the number one reason that people get denied is not because they didn't qualify for funding, it's because of non-matching information, right? So it seems very minute, but this is why we go over all of this. Now, the other thing is when we go into funding is a lot of people talk about their credit score. Hey, I have a 700, I have a 750, I have a 680, right? Whatever the credit score is, so many people get so fixated on the credit score. And I'll be 100% honest with you. The credit score gives you an idea, but when it comes to funding, in my opinion, the credit score is really honestly irrelevant whenever it comes to understanding how to get the approvals, right? And I'll go over the reason why. Now, we're going to discuss a couple different factors here. We're going to go over data points. These are the specific data points that we look for whenever we're underwriting to go and fund a client, right? So there's a couple different factors that we're going to discuss. If you look on the left column, we're going to discuss the utilization. We're going to discuss inquiries. We're going to discuss payment history, credit age, derogatory remarks, and total accounts. Now, if you look across, you'll see TransUnion, Experian, and Equifax. And as mentioned, those are each individual accounts, and they're all going to report different information. So the first thing is utilization. Now, utilization is very simply the percentage of an account that you're utilizing as compared to the available credit that is available to you, right? So I know we talk about high limits of funding, but just for simple math, we're going to use something very, very simple. And let's just say you have $1,000 credit card, right? Now, let's say out of that $1,000 credit card, you are utilizing $300 of that $1,000 credit card. That percentage, for simple math, breaks out to 30% utilization of that individual account. Now, one of the data points that we look for whenever going through funding is the utilization of accounts for each account and overall. You want to stay under 30% utilization for each individual account prior to going through the funding process. So when you look at that, when we're looking at utilization, you want to be between 1 and 29% utilization per account on that credit report, right? Very, very important. Now, inquiries. Inquiries do not hurt your credit score a lot. So a lot of people will have a high credit score, but that doesn't necessarily mean that they're going to be able to get approved for funding. And oftentimes, whenever I'm looking at situations like this, it's because of inquiries. Within the last 6 to 12 months, you really want to sit between 0 and 2 inquiries on your reports within the last 6 to 12 months. Very, very important. Inquiries do not hurt your score a lot, but they do, quote unquote, show how actively you're looking for funding or capital, which the more inquiries could seem, quote unquote, desperate to banks or institutions or investors whenever you're looking for capital, right? So it's very, very important that you follow these data points. Now, payment history. You want 100% payment history, especially when you're looking for high limits of capital, right? Banks and institutions and investors alike, they love to give money, but they want to give money to individuals and businesses who have a track record of being able to pay those funds back, right? It's just, you want to have that payment history to show that you are more credible, especially now, because there's more businesses than ever opening up every single day. And so more people are looking for access to capital. So you want to put yourself as the competitive advantage as compared to other applicants that are going through this process, right? Very, very important. Now, credit age. They really want to see an average of 4+ years across all of your accounts. This really just shows stability, again, stability and being able to manage those accounts over a period of time. So that's important. Derogatory remarks. So derogatory remarks are like late payments, collections, charge-offs, bankruptcies, foreclosures, liens, things of that nature. You really don't want any derogatory remarks as you go through this process. Kind of going back to payment history. Institutions, banks, and investors love to give money. I want to repeat that. They love to give money. They are in the business of giving money, but they want to ensure or create the highest probability that they're going to be able to receive their funds back, right? So you want to make sure that those derogatory remarks, that you don't have any derogatory remarks prior to going through the funding process. Another thing here as well at the bottom is total accounts. Banks, institutions, and investors, they really want to see multiple different accounts over your credit profile, right? Someone who is able to manage multiple credit accounts is going to be a lot more credible and trustworthy than someone who just has 1 or 2 accounts, right? So very, very important. And if you'll notice at the bottom, this is kind of what I discussed in the beginning. While these are ideal metrics for maximum approvals, these are not the absolute determinants for an approval. We just coach you how to put yourself in position to get high limits of capital, not just being able to get approved for small amounts of capital. Just as I discussed in the beginning, this process focuses less on the score and more on the accounts that actually make up that profile. So I hope that makes sense. If you have any questions, take notes, and I assure you we'll discuss all of this at the end. Right now, credit monitoring. In order for you to understand the information that's being reported on your behalf, or to understand the structure of the information that's being reported on your behalf, you have to have some kind of credit monitoring service, right? Because when you do that, these services, they offer the reports so that you can review the information that's being reported on your behalf, right? Now, you're able to find and easily eliminate issues on your credit report when you understand how to access and read your report. Now, there's a ton of credit monitoring services out there, but ultimately these are going to do a couple things, right? They're going to provide a full picture of your credit for all 3 credit reporting agencies. Remember the main 3 we talk about: TransUnion, Equifax, and Experian. They're going to give you regular updates on your credit scores. You're going to be able to compare your reports to identify any potential discrepancies, and it's going to help you manage the timing of the applications that you're submitting. Now, a couple different things here. One of the things that we really use for a lot of our clients is annualcreditreport.com. Now, you can use annualcreditreport.com. Prior to COVID, you could only get a free credit report once a year, which is why it's annualcreditreport.com. However, since COVID, you can actually get a free weekly credit report. Now, one thing to note here, just so that you can be applicable and proactive in this process, one thing to note here is that when you're on annualcreditreport.com, they don't actually give you your score. They're just going to actually give you your profile. So that's one thing to note there. Now, the reason we do that and the reason we review the credit report first is because, again, that outlines the foundation for most clients to begin the funding process. Now, we take the information from the credit report to structure the rest of the funding deal. So here's the next step. First step is you get access to the credit report to review all of your information. The second step to that, to accessing funding, is the bank selection strategy. Right now, this is where you're actually going to choose the banks that you're going to use for your funding based on the information that was on your credit report, right? So there's going to be a couple different things. You're going to, for step one, when it comes to bank selection strategy, number one, you're going to choose banks that align with your best bureaus, right? So that's going to be TransUnion, Experian, and Equifax. You're going to prioritize, so that's the first thing, because banks don't pool. A key part of information here is not all banks pool all three credit reporting agencies. Most commonly, banks are going to pool one or two of the three credit reporting agencies, right? So it's very, very important that you choose banks that align with your bureau strengths. Number two, not only can you prioritize banks that align with your bureau strengths, you can prioritize banks that you already have strong relationships with. Now, when we say relationships with banks, we're talking about banks that you may have a checking or savings account, whether that be personal or business. If you have credit cards, whether personal or business, whether you have any kind of credit accounts or investment accounts with businesses or other banks, those are places that you have accounts that you're a member of and you're starting to build that relationship. So you want to choose banks that prioritize your best bureaus, but you also want to prioritize banks that you have relationships, because relationships matter. I'm sure you guys know they matter in life. They matter in business. They absolutely matter in banking, right? And then the other thing is that a lot of people, when they think about looking for capital, again, I consult a lot of entrepreneurs who are looking for $100,000, $200,000 plus in capital. Absolutely possible to get it. However, generally speaking, for most people, they cannot get 100,000 to 200,000 from one bank. And most people, when they think about funding, is they say, hey, let's just use Wells Fargo, for example. Hey, I bank with Wells Fargo. I'm going to go to Wells Fargo and I'm going to apply for all 100,000 or 200,000 at Wells Fargo. And that's where most people go wrong, because though they can access capital, they typically can't get it from one bank. So for best practice, you're going to apply for your top banks. Typically, what I tell clients, especially when they're looking for high limits of capital, it's going to be anywhere from 5 to 10 banks for best results. Now, here's just a couple different examples. Now, if you're looking at funding, here's a couple different examples that we break down for the different bureaus, right? So some examples, if you're looking at TransUnion, you can look at some banks like Navy Federal Credit Union. You could look at banks like US Bank. If you have a Cadence Bank, not a lot of people talk about Cadence Bank. That's a great bank to use. If you're looking at Experian, you could look at banks like or institutions like American Express, First Horizon, if those are in your area, and PNC is a great bank as well. And if you're looking at banks like Equifax, you want to look at banks like Truist, Chase, and PenFed, right? So there's a lot of different banks to utilize based on the strength of your bureaus. Now, the next part, so step one, you get the credit report to search the foundation. Part two to that, you're going to prioritize banks that are going to pull from your best bureaus or that you have relationships with. And step three is most people, when they think about funding, they say, hey, I'm just going to go online. I'm going to submit an online application. It's convenient. I'll be done in a couple minutes, right? And although that's a strategy, it's not the best strategy, right? And so the best strategy that we see for the best results is implementing the BRM, which is an acronym for Banking Relationship Managers, and the long-term funding strategy. So Again, just like I talked about a second ago, relationships matter. They matter in life, they matter in business, they absolutely matter in banking. And so you want to be using banking relationship managers. In the industry, we call them BRMs, because they are trusted bankers who have a certain status within the banks that you're applying for, and they're going to typically help you increase the chances of that approval, of even just getting that approval. But oftentimes you're going to be able to get a much higher limit approval as well too, just because again, they're a trusted banker inside of that bank, but they also have a relationship with the bank and they have a relationship with underwriting, right? So very, very important. Now, first round expectations for someone who is in the ideal funding position for all the data points that we talked about. First round expectations, most of our clients, or you can typically comfortably aim for between about 100 to $250,000 in initial funding, utilizing the exact steps and data points that we talked about up until this point. Now, that's first round expectations. Now, here's the best strategy. Ideally, you're going to get access to the capital and you're going to use it for the same ways that we talked about previously. So you're going to be able to invest into your business, invest into real estate, stocks, whatever the case may be. Those are just some of the most common for our particular clients. And you're going to manage the fund well. You're going to utilize it. You're going to pay it back. You're going to manage it. You're going to use it for growth. Now, you're going to do this process for the next 6 to 12 months, because what that does is you're going to have a stronger financial standing and business credit profiles. The difference between now and 6 to 12 months from now, generally speaking, for most clients, is right now they don't have $50,000 to $100,000 plus in business credit. The difference is 6 to 12 months from now, once they access and manage it well, they've had that 50 to 100,000 or whatever that amount is established and built on their business credit. So now they have a more credible profile and are more bankable as they go forward, right? So that's amazing. And the reason we do that is because when you do the funding for subsequent rounds or future rounds, you're going to expect similar funding results because of something that we call comparable credit. When you're right now, most clients don't have the funding, the 50 to 100,000 that I just talked about. So banks don't want to be, quote unquote, the first one on the block or the first one of that client to give them high amounts of funding. But once you manage it well and you have comparable credit, now other banks and other institutions and other investors have something to go off of to review your credibility, right? So it's very, very important. Now, the long-term goal is you're going to duplicate these strategies and you're going to consistently manage the funding to build access to multiple six-figure credit lines and duplicate this process over and over again. And by duplicating this process, we've had multiple clients duplicate this process to reach $1 million plus in business capital over time, utilizing these same exact strategies, right? Now, of course, I want to set proper expectations, because just as I mentioned, it's absolutely possible to get $100,000 when you have the data points that we talked about, but you're typically not going to get it from one bank. So I want to give you an example and set expectations properly of what it looks like when you set up your initial sequence. Now, your initial sequence of 5 to 10 banks can be modified based on approval results. So for example, in our own scenario, if a client comes to us and is looking for 50 to 100,000, like I said, most times it's not applicable to do it with 1 or 2 banks. However, sometimes for client results, we are able to. So we may start out with 5 banks, but it may only take a bank or 2 in order to get their approval, right? So you may receive fewer or more banks in your sequence based on the initial outcomes of your initial sequence. So we say 5 to 10, but you don't always necessarily have to use 5 or 10. You can use, sometimes we use less, sometimes we use more, depending on the situation. Now, as an example, here's a sequence of what it looks like. As an example, if we ran an 8-bank sequence in order to get somebody for 100,000, right? So there's 8 banks here. We might go to the bank number 1, we get 12,000. Okay, cool. We go to bank 2, we get a denial. Not necessarily the greatest idea, not necessarily the greatest result, but approvals and denials are a part of this process, right? Bank number 3, we go to them and get 50,000. Bank number 4, we get 20,000. Bank number 5, we get a denial. Bank 6, 15,000. Bank 7 might be a denial. Bank 8 is an approval, but it's only of $3,000. But as you can see, we did 8 banks. we did 5 approvals, and you totaled $100,000 still in capital that that particular clients can use. Now, remember, we use this approach because it ensures flexibility. You want to be able to have flexibility and multiple options as you go through this. And it also increases your chances of reaching the foundational goal that you're looking for. Now that we've discussed a little bit of the foundation on the credit side, now we can actually discuss what it looks like in business structure, because both personal credit and personal details and business details are both applicable as you go through this process, right? So again, you want to have a business established, but you want to make sure that it's structured the correct way. I see a lot of times people have a business structured, but we have to do a couple different things in order to make sure that it gets set up to be presented like a business, because you're going to increase the amount you get funded when you understand how to structure your business properly. You want your business structure to be presented and treated like a professional business, not like a hobby, right? And so we're going to solve really the 3 biggest problems that business owners face when going through this process. Number 1, just like I just said, properly setting up a business to run like a business instead of it being treated like a hobby, right? Number 2, creating a proven system to get your business funded with minimal documentation, because the better credit profile you have, the better your business is structured. Remember, the more credible you are, and the more credible you are perceived. When you are presented as a more professional entity or a more professional organization, you're going to bypass a lot of the red tape that businesses that look like hobbies are going to have to go through, just because they don't look like professional businesses, or in simple terms, they don't look like they've been in that realm before, right? And so you want to be able to set up your business and your profiles so that you can go through this process without all the red tapes and hoops and all these different things and minimal documentation, because you're verifying yourself on the front end before you even begin the process, right? And ultimately, how to leverage banks as your investors. I see so many people all the time, again, say if I had 10,000 or 50,000 or X amount of money, I can do a business, or they would make it start a business or do things to their business or make a certain investment. And the most common thing that I hear all the time is, I need an investor. I got to create this pitch thing, and I have to go through all these hoops and things like that in order to get access to capital. And ultimately, when you understand how to access capital, you'll know how to leverage the banks and use their capital in order to create the results that you're looking for, right? And when you look at some statistics, this is very important. When you look to the right, I'm a person of numbers, right? So 82, according to the SBA and SCORE, 82% of businesses fail due to cash flow problems, not necessarily because they don't have opportunities, but because they don't have the cash flow or leverage to be able to capitalize on those opportunities. And 30% of businesses are more likely to survive past 5 years when they are structured properly and funded properly, right? Now, I want to discuss why most businesses get denied, because when you understand why most businesses get denied, we're going to do the exact opposite so that we can increase our chances of that approval, right? So there's a couple things that we discuss here. Fundability is really a term that we use as far as lender compatibility. Again, it's setting up your business to be presented like a professional business as compared to a hobby. A top reason that I see people get denied is because they haven't divorced themselves from the business. So they might have a business, but they might still be operating out of a personal account. You need to separate yourself and divorce yourself from the business. The business needs to have a different address, a different phone number, a different bank account, a different email. It is a different entity separate from you. So you need to divorce yourself from that business to increase the legitimacy of your business, right? The other thing is that applicants did not structure the foundation for building business credit. Again, you have to set the foundation for personal credit, business credit in order to access business funding. Very, very important. A lot of times people don't know how to leverage their assets or income in order to maximize their funding opportunities, which is important. Most people fail to set up with any of the business credit reporting agencies. So on the personal side, there's a lot, but the main ones that we discuss are TransUnion, Experian, and Equifax. On the business side, however, we look at Business Experian, we look at Business Equifax, we look at the the SBFE, which is the Small Business Financial Exchange. We look at Dun& Bradstreet for the paydex scores, right? There's multiple business credit reporting agencies as well that you need to get set up with. And another reason that people get denied, especially when they're looking for high limits of capital, is they have no open credit cards or credit accounts with major revolving companies, right? So American Expresses, Visa, Discover, MasterCard, a lot of these major companies, major names, you need to have accounts set up with them. Now that we discussed that, now I'm going to actually show you how to build the foundation and present your business as a professional business. Now, a couple of disclaimers here. This is a trust class. This is a trust mastermind. Now, the way that I teach, because in full disclaimer, it is absolutely possible to get a trust funded solely based with the trust. However, you have to understand that a trust is a contract which is treated differently than public entities, right? So the reason I'm saying this is because it's absolutely possible to get a trust funded, but it goes to a different department in the bank. Therefore, there's a little bit more hoops and a lot more documentation required and requested whenever looking for funding. So what I teach is how to leverage public entities that are controlled by the trust in order to acquire funding in the best interest of the trust for how you see fit, right? So I teach you how to leverage state entities such as LLCs or corporations in order to acquire funding in your best interest, right? Now, I don't want to make any assumptions. A lot of times clients of ours have businesses established. However, I want to take this from step one to all the way to the end so that you know how to set the foundation to get business funding. So number one, there has to be a business, right? So you have to be able to set up your business. Therefore, you have to have a business name. So that's number one. Number two is that when you choose this business name, you really want the domain to be available. The domain is just the website. You can access the domain on a couple different sites. You can go to GoDaddy.com. You can also look at Google domains. Those are the two most popular. And you want to obtain a domain that is available for your business, right? So for example, if you have ABC Consulting, you don't want your domain or your email to be, or your website to be DEF Consulting, right? There's no congruency there. It doesn't look as professional, right? So that's the first thing. The second thing is when we go to that, is that number two, you want to obtain a business email address at your domain. So if your name is Bob, you want it at bob@abcconsulting.com. Looks a lot more professional. Number two, you also want to get a business address and a separate business phone number. Looks a lot more professional on applications when you present your business as a completely separate entity, right? Now, touching base on number two, prior to COVID, all of my clients, I would coach them to get a virtual office or to have some, if they didn't have a brick and mortar, I would have them, or a physical location, I would have them and consult with them to get virtual addresses. That's still best practice for a professional business address. However, since COVID, it is more acceptable for clients to use their home address in order to access capital, right? Now, number three, you're going to apply at the SOS, which is the Secretary of State, for the individual state that you want to open up that entity with. You can do it yourself. There's a lot of resources online to do it, or you can use a third party. For us specifically, we use a platform called Zen Business, ZEN business.com, to set up a lot of our entities for us and our clients. They don't charge you any like additional fees. They just charge you state fees. And with us, I like to leverage other people's money, but I also like to leverage other people's time, right? And although we can do a lot of things ourselves, we can outsource it for someone else in order to do it to save us time, right? So you can do it yourself, or you can use a third party. Number four, you want a registered agent. You want professional entities or individuals other than you to be able to accept mail on your behalf, makes your business seem a lot more professional. So you want to get a registered agent, and you want to have an operating agreement or bylaws, depending on whether you have, it would be an operating agreement if you have an LLC, or it would be bylaws if you have a corporation, and it just outlines how that business is actually going to operate and perform, right? Now, once you have all of that, number five, Christina has showed you how to get an EIN. Now, an EIN is free. It takes 5 minutes to set up. I always emphasize this because I can't tell you how many times over the years someone has told me, and thought that they had to pay all of this money and go through all of these hard processes to get an EIN. You can simply get an EIN. It's free. You can go to irs.gov. Takes 5 minutes to set up an EIN. You can access it immediately, right? Now, once you get your EIN, now you're able to build a credit profile based on that EIN. And the other thing is that if you want to get into like government contracts, the other thing that you want to do is you want to set up D&B, which is Dun & Bradstreet, which is absolutely necessary, especially if you want to get into government contracting. Now, once all of those foundational steps are done, then you want to do step 6. So once your business is started or once your business is birthed, now you need to establish an online presence. That is, building a website would be the best way. And contrary to popular belief, you don't have to build out and spend thousands or hundreds of dollars on websites. You can do a simple one-page website, a picture of you, a simple description of what your business does, and I assure you it's going to put you a long way ahead compared to most business owners out here, right? A website is huge. You can also generate other, online presence as well too. So you can use YouTube, Facebook, Instagram, things like that to build your online presence. Number 7, you have to open up a business bank account. When you're looking for business funding, when you're going to these institutions, it is best practice to open a business bank account. Now, when we talk about building relationships, just like I talked about earlier, the more accounts that you have with a bank, the stronger that relationship is. So when we're looking for business funding, it is a requirement to open a business bank account. However, sometimes we will have clients open up a personal bank account at that same bank. It's optional, but again, the more products you have with a bank, the more trustworthy you are, the more that the bank sees that you're interested in them. It's kind of like dating. You're not going to go and date someone who seems completely uninterested in you. You want to give time, energy, and resources to those who seem interested in you, right? The same exact thing with banking. The more products you get, the more deposits you make, the stronger that relationship is, right? Very, very important. Now, number 8, kind of building upon number 7, is that you can use different products that the bank offers in order to build your relationship, right? Some of the different things that they offer: merchant accounts. So if you have a business, you need to be able to process transactions. Banks have merchant accounts, and it's going to build a great relationship with the banks that you're looking for funding. So setting up merchant accounts, obviously setting up bank accounts, and then also accessing credit products for personal and business as well too, right? And again, it's really setting up a business to be presented as a professional business. Now, as we move on, there's a couple different ways to establish a business. And these are the common ways that we see whenever we work with clients, right? So there's a couple different ways that we go over when it comes to establishing a business to put it in position to get business funding, right? Number 1, the startup. We're going to go over a couple of different benefits and a couple different points for each one. So we're going to discuss startups. We're going to discuss age corps or age corporations. And then we're also going to discuss one of my favorite, which is acquisitions, right? So number 1, startups. The startup gives you the maximum flexibility and creativity because you're building a business from the start, from the ground up, right? You can create the name, you can create the address, you can create what it does, all of that. Now, you can create unique offerings, you can establish new markets, and you can innovate freely because you're starting it up. Now, contrary to popular belief, startups can still secure capital and funding within 30 days of being established. I've worked with a lot of clients before, and they're saying, hey, my business started a month ago or 2 months ago or 3 months ago, I can't get funding. That is not necessarily true. And we have helped a lot of startups get started their company and get access to capital with at least being 30 days of being established. But funding, obviously, again, age produces credibility. So although it's possible to get funding with a startup, you're typically going to get much better funding and results when the entity is a little older, right? So that's a startup. Now, age corporations. Again, when we talk about timing, age corporations are a great way to increase that time, because what you do with an age corporation is it offers an established business entity that has been legally formed previously, right? So you do get broader access to business credit and financing due to the corporation's age and longer history. Now, it's very, very important when you're dealing with age corps. They're a great resource and a great tool to use, especially when it comes to business funding. But you want to make sure that you work with acquiring an age corporation from a reputable source. If you have a reputable source, great. If you don't, we are a reputable source that you can utilize, right? Now, one of my favorite is acquisitions. It's acquisitions, again, when we talk about timing, acquisitions really fast tracks business growth by acquiring an already performing business and taking over their market operations or their market presence, right? And the reason this is amazing is because you get immediate access to revenue, trained staff, and valuable customer relations, which we can leverage all of that in order to access higher limits of funding. Now, one thing about acquisitions, you do need to work with someone who has experience with acquisitions because it does require careful evaluation of a business's financial health and smooth integration with the new owner's vision, right? So those are the three most common ways that we use or that our clients use in order to access capital, right? Now, there's a lot of funding programs out there, right? You can get really creative, especially when it comes to creative financing, and really create a customized strategy. Now, we mentioned that there's a lot of funding programs out there available. Our primary focus, especially for this specifically, is for 0% business credit cards and business lines of credit. However, the most common question I get, hey, is that the only funding program or is that the only one available? No, it is just the simplistic, most common and best use for most clients whenever they're looking for funding. Now, when it comes to a lot of other funding programs that we deal with, these are some of our other common funding programs. You can break it down to loans, you can break it down to lines of credit, credit cards, lines of credit, and other financing. So we're just going to brief through this really, really quick for a lot of things that we work with. So when you look at loans, we can look at DSCR loans. We have DSCR resources, auto financing, right? Auto financing, fleet financing, term loans, SBA. We have a lot of great relationships with SBA. Equipment financing, right? We can finance tractors, we can finance trucks, we can finance a lot of different things, right? Credit cards, 0% business credit, 0% personal credit. You got corporate credit, travel rewards, cashback rewards. You got business lines of credit, one of my favorite products as well too. Home equity lines of credit. We assist a lot of clients there. Personal lines of credit. You can do an investment property secured lines of credit. You can also do securities-backed lines of credit. Some of our clients have massive crypto portfolios or stock portfolios or investment portfolios. We can do security-backed lines of credit. We can do merchant cash advancing, invoice factoring, asset-based lending, revenue-based lending, and inventory financing, right? So we're not going to go into details on all this. I just get a lot of questions, a lot of time on what other funding programs that we have available, and there are a lot. There's really even more than this. But these are just some of our most common that we typically work with clients. Now, I want to show you some of the results that we get. Now, as a disclaimer, past performances do not guarantee future results. Again, this is very general information, but when you're going through funding, it has to be catered to your specific situation. So really quick, I'm going to go over 3 of my favorite case studies. Some of you have seen these before. But these are 3 of my favorite because they highlight a couple different scenarios whenever it comes to funding, right? So the first client, if you look on the left, this is a product called Divvy, which is known as Bill. One of the things that when it comes, I know we talk a lot about credit, but there's a couple different things when it comes to funding. And one of the things that there is credit-based financing, but there's also revenue-based financing as well too. And one of the most common misconceptions is people are like, hey, I have bad credit, there's no way I can get funding. But oftentimes we work with business owners who they may have challenges credit-wise, but they do have a performing business. This was the case for this particular client. This client had some personal credit issues, right? But they had a very well-performing business. And they had a misconception that, hey, I can't access funding. So they bootstrapped their whole business. They were one of those clients who were earning revenue, but putting all of that revenue back into the business, right? Every transaction was going back into the business and it was working, but it just didn't have the leverage that he was looking for. And so for this particular client, he came to me, we were able to consult him, and he had never accessed credit products before. We were able to take him through, utilize this product. He was able to get 100,000, which is huge, especially when you're used to being a business that has to put everything back into the business and there is no form of leverage. So that's huge. The second one is, I love one of the banks that we use a lot in our funding programs is we use a lot of regional banks and credit unions. One of those, and the strategies that we utilize with this, is also being able to leverage multiple products. So a lot of clients, when they go to a bank, they're thinking, hey, I'm just going to apply for one product, not knowing that you can access multiple products at some of these banks when you're looking for funding, right? Huge. Key Bank is one of those examples. This client, we took them to one bank. We got two products. We did a $50,000 line of credit. We did a $40,000 business credit card, which was huge because we were able to get this client $90,000 from one bank. It kind of goes back to what I was talking about earlier. Hey, when you may set up a sequence for 5 to 10, but you might only need one or two, right? Very important. So that's huge. And then another thing is Chase is one of our biggest lenders. And this was huge. We are able to pretty consistently get these kind of results. But from one approval, from a client who pretty much had the limiting belief that they didn't have enough performing business and they couldn't go to the major banks to get funded. So they never used major banks, right? They just didn't believe that they could get approved, in short. And even though they had never used major banks before, we were able to take them to Chase, one of the biggest lenders in the world, the number one bank in the United States. And we were able to get a $75,000 approval from one particular bank. Now, this happens all the time, right? We do this. There's really hundreds, there's thousands of others. There's a lot of results. But we just wanted to go through, really quick just to show you kind of what's available. Now, the truth is that these results are from doing and implementing all of the strategies that I've talked to you about up here. So, accessing the personal credit report, structuring the banks, making sure your business is structured the right way. We do all of that because it becomes predictable. Because when you set the foundation, the results really become easy and predictable in order to fund your business. And when you set the foundation, you're more able to project or predict what you're going to be able to fund yourself, as compared to what most people do. They submit an application and they're just kind of hoping and praying to see what their results are, when instead you set the foundation so that you can more control and present your business as a professional business. And we've talked a lot the last couple minutes, but there's really only two things that matter. Number one, setting the foundation to getting and maximizing your funding opportunities. Number two, it's really getting the high limit approvals. And we do this by a couple different things. Summarizes everything that we just did. Following a simplified process to achieve consistent and high limit funding results. Leveraging banking relationship managers, again, having relationships and bankers inside of the institutions that you're processing with. Understanding application rules, because the application rules are different for each bank. And it's understanding what relevant bureaus that banks review to understanding their approvals, right? Now, when you combine all of this together, everyone asks me, okay, this is great. Now, what do I really need minimally in order to get funded? Along this process, we talked a lot about maximum ideas and maximum data points. Here are really the minimal data points that you need in order to get funded, right? Now, remember, there's a couple different programs out there, but these are credit-based qualifications, right? So typically, again, very generally, when we're looking at the credit score, typically 680 plus across the board will get you in the door. One major credit card, right? So again, we talked about Visa, MasterCard, American Express, Discover, at least one major credit card. You ideally want that card to be 1+ year old. The older it is, the better, the more credible you are. You really want that account to have a $2,000 plus limit, especially when we start to talk about comparable credit. Now, no derogatory remarks, so no collections, no charge-offs, no past due accounts, no bankruptcies, things of that nature. Now, no late payments. Minimally, really, when it comes to late payments, you really don't want to see late payments within the last 24 months or the last 2 years. That's what I really consult all of our clients to do. Now, there are some situations where you can access funding as long as you don't have a late payment within the last year, just for educational, but you're going to get a much lower approval because you have recent late payments. So the ideal is you want your late payments. If you have late payments, you don't want any within the last 24 months or the last 2 years. No more than 3 new inquiries within the last 6 to 12 months, just like we talked about earlier. Inquiries don't necessarily hurt your score a whole lot, but they show how often, quote unquote, credit desperate you are when you're looking for capital. 2+ years average age history. Now, very common. One of the things that people talk about a lot in the industry are authorized users. This focus, these data points are not really based on authorized users. These data points are based on the accounts that you have in your personal name and what you have been able to build. Authorized users do not help as significant when it comes to business funding. Authorized users will help you when it comes to personal funding and personal products, but for business funding, they really do not help you. They want, especially now, in an ever-changing industry and banking industry like this, you really need to be more credible yourself because you're going to put yourself in better financing opportunities. No new accounts within the last 6 to 12 months. And just like we talked about earlier, 1 to 30% utilization, right? Now, a couple things that you need to apply. Obviously, basic details about you and your business to identify and verify you and your business. There are document-based funding programs where they ask for a lot of documentation. There are no document-based funding programs. So there are multiple options to choose from whenever it comes to funding. And whenever we're looking at funding, I know we talk a lot about credit, but there's really 3 C's that we look at whenever it comes to funding. Number 1, we look at credit, or the 3 C's that we look at when it comes to funding. You can look at credit, you can look at cash, or you can look at collateral. Credit is the best just because it shows that you are obviously more credible. Cash, if you have cash or liquid assets on hand, you can do that. Or if you have assets you want to use as collateral, you can do that as well too. Now that you understand all of this, what are really the next steps? So again, the reason we talk about all of this is because we want you to be prepared to take action and get results. So ideally, what you do from here is you take this information, you take action, you take the steps yourself, and you go and get the funding that you need. And I would love to hear about what you've been able to do, what you've been able to fund, and what you've been able to do with it. But we know all of this can seem a little overwhelming and time consuming, so we do offer these services. We offer a team to handle the entire funding process. We have a system and trusted bankers that manage everything really from A to Z. And we do a one-on-one consult to prepare for each and every step of the way, right? So the way that we work, most commonly people are like, hey, I love what you offer, but I don't even know what it would take for me to get started, right? And so what if I really told you that it was $0 in order to get started with our program? And this is what we offer, because we are strictly performance-based. So here's what we offer. We offer complimentary audits. We offer funding, coaching, and consults. You have a full-time support staff to address all your questions. You get introduced to our banking network. We've already established the relationships with hundreds of different banks. I know most people are familiar with maybe the top 1 to 5 different banks, but there are hundreds, thousands really, of banks in the United States alone. So you get introduced to our banking network. We offer continued education. And really the biggest thing about our organization is we are strictly performance-based funding, which means if we don't get you funded, we don't actually get paid, right? So that's the way that works. Now, our goal is to fund you $100,000 plus. And this is discovered, again, we are strictly performance-based services. So here's what we offer: the complimentary audit. Here's how we do it. We do a one-on-one intake call for everyone who opts into our services. We do a one-on-one intake call to collect the personal and business information, just like we talked about previously, right? So that's the first thing. The second thing is we create a sequence customized to you. The funding process for every client is going to vary per client and their specific situation. How we do it, we give you funding, coaching, and consults in order to create the sequence, banks, and products that work best for you. Number 3, we offer the application assistance. How we do it, we execute the applications through our qualified BRMs, which are our banking relationship managers, just like we discussed previously. Now, what happens is after review, our process is ultimately to determine the first steps to get you funded. Everyone's first steps to get funded is completely different based on their particular situation. Some clients are able to begin the funding process immediately. However, some clients may be facing some credit challenges, or they may be having some structural issues that we have to address prior to take them through the funding process. The one thing that we can guarantee, and really the only thing that we can guarantee throughout this whole process, is after review, We'll know the first steps to get you funded, and every client will have a clear roadmap of what they have to do in order to qualify and get the funding that they're looking for, right? So Christina in 7 Ways, they're a great community and great platform. Would love to service you guys as I'm been a part of the community for a long time, and I've serviced and worked with a lot of clients from here. She is going to give you a link. You're going to use that link below. It's going to have a basic intake form. And what that's ultimately going to do, it's going to give you an opportunity to get on our system, help us understand a little bit about where you are, and being able to book your complimentary intake call. We don't charge for that, right? Completely complimentary, in order to determine the first steps to get you funded. So she is going to post that for you in the chat. Now, support. I want to make sure that you know how to get support so that we can get you in started and through this process as fast as possible. So the first thing is you need to monitor your spam or your promotional folder, your email folder, immediately after booking. Sometimes, most times, our emails will go to your main inbox. However, sometimes just because of automations and marketing emails, sometimes they do go to the spam or the promotion folder. So the first thing is, after you book, please check your spam or your promotional folder for your confirmation and all of the details for the next step. So that's the first thing. The second thing is, note that we are primarily a text-based support team. Once you opt in our system, my team will be in contact with you. We are primarily a text-based support team. That is the fastest way to reach us, is via text. And responses typically take 3 to 24 business hours based on when you reach out to us during the day. Now, to set the expectation as well too, I want to give you the business hours of operation so you know when to expect a response. So Monday through Friday, our operational times are from 10 a.m. Eastern to 9 p.m. Eastern. On Saturday, we do a short day, so it's from 11 a.m. Eastern to 4 p.m. Eastern, and Sunday, we are closed, right? I do give my team the day off and short hours on Sunday. We work extremely hard. We serve at a high level, but we also want to make sure that you know how to get the support that you need. Now, I did as best as I could to try to trim this up, give a lot of value, and really trim up the amount of questions. But of course, I expect there to be some kind of questions or some kind of clarity for certain people's specific situations. So I do have about 15 to 20 minutes that I can actually go through this process to answer any questions that you have, any concerns that you may have, and kind of see what we can do in order to get you addressed. So I hope that that was extremely valuable for you. And what we'll do is we'll just go through a process one at a time in order to get your questions answered. If you would, just please raise your hand, and then I guess I'll either reach out to you or mention it, or Christina can, either way, in order to get your questions answered. Christina, do you want me to manage it, or do you want to hop in here and manage the questions? I don't mind either way.
I just want to say thank you so much. Every single time that you come into the workshop and educate the community, I'm like blown away. I'm like, oh my gosh, because you've given away all the sauce. And I just know that this is the foundational education that they need in order to really leverage that business credit and get that OPM. And that's what I want them to understand, because a lot of our community members, they're using their own paycheck or they're using their own personal credit, and that's not the way to go. So Brian has the blueprint. What I'm going to do is I'm going to drop his link in the chat so that you guys are able to get in contact with his team, and we're going to open up the floor for Q&A. So yeah, me and you both, Brian, we can go ahead and call on the people. So I see Ms. Dina had her hand up.
I do see Ms. Dina. If you could go ahead.
Hello, Mr. Darcy. I don't know if you remember me.
I do.
But
I
you
do.
do. Oh,
Absolutely. How are you
I
doing?
just want to
She's
thank you so.
unforgettable.
I want to thank you so very much for all your help. I started out, as you know, with the problems with the personal thing. I just want you to know I kept going. I got my payment history, 100. I got 100 on that. I got my utilization. I understand what that actually means. And I got to where, as Christina says, the sweet spot. So I'm just keeping on doing what you had taught me to do. And so now here's where I want to start with get my business credit together. First of all, I want to ask you this. Is it true that if I ask for a credit, limit increase, that is considered a hard inquiry?
Great question. So that's going to vary per bank. That's a great strategy to utilize whenever you want to increase your comparable credit. But some banks do a hard inquiry to do a credit limit increase, and then some of the banks do not. So it depends on each individual bank. I would say the best advice, just because obviously we had a great conversation. I love to hear that you've taken a lot of that information, and a great example of using the information, building upon, and putting yourself in a better position so that you can access funding. Now, the reason I say that is because it's been a couple months just since we've seen your information, and I don't necessarily remember the accounts. But if you submit that information for your accounts, we know which banks will do a hard inquiry and then which banks will not do a hard inquiry for that for the credit limit increase.
Okay, so I won't move until I see you regarding that.
There you go.
Okay, the next thing I wanted to know is, does my car loan count as an open account?
If it is an open car loan, yes, it does.
Okay.
Now, one thing to note though, just to clarify, car loans is an example. So utilization does not matter on car loans because that's what's considered an installment account. So in simplicity, an installment account is an account that you open that has a predetermined payment amount and a predetermined payment schedule. So car loans are a great example of that. You sign up, you open that account, you pay X amount per month over X amount of months. So utilization does not affect installment related accounts. The most common installment related accounts are auto loans, personal loans, or mortgages. So I just want to clarify that utilization is not calculated for those. It's only for like really credit cards or what are considered revolving accounts.
Okay. The next thing is, I got the name of the business. I did my GoDaddy thing. I'm getting ready to do the EIN, and then I'm gonna do my I heard about something called Fiverr, and so I want to let them do my website. And
Perfect.
so I just got to do the SOS and the registration agent. I wanted to let you take it from there.
Okay.
Stop.
Absolutely.
That's okay.
So yeah, so that's awesome. And really, if you need any assistance through that, you don't have to do it on your own. Like I said, we have a full-time support that can like coach you through it as well. So if you want to do it on your own, great. But if you need any assistance, obviously you can reach out to us and we can coach you through that as well.
Yeah, that's what I want to let you do. I want you to help me with that. So I just go back to the link and set up my appointments.
Yes, ma'am.
All right, will do. Thank
All
you
right.
again.
Of course,
Good
you're
to
very
see
welcome.
you.
I'll see you
Okay.
soon.
Okay.
And okay, awesome. Let me lower that one. Okay, it looks like Kamala is next.
Hi, hi,
Hey,
Mr.
good afternoon.
Dorsey.
Good afternoon.
Okay,
Good afternoon.
how are you? Great
I'm awesome.
presentation.
Well,
Lot of information. My question is, like I am like co-signer on two of my kids' student loan, and it's been lowering my credit score. It's affecting me. Is there any way of getting that off of my credit report? Is there a way to go about that?
yeah, so there is. Now, when you co-sign for somebody though, if you co-sign for someone, that means that their particular credit profile initially when you got that account were not strong enough in order to get that approval on their own. So there's a couple
Correct.
different things. If their credit is better and they're able to, change that loan, we could do that or we could assist that. Or you would have to go through some strategies where you probably have to close out that account so that it's not affecting you. Because
What do you mean close out that account? Where because my one daughter is finished one more month and she's finished and she'll be able to handle that student loan, but
okay.
she fall behind payment. Now the other one is she had fall behind payment too, which I didn't know about, but it's affecting me. It's bringing down my credit score drastically because and those loans are showing up on my credit report. So that's one thing. And my other question is, I have a timeshare, and though I've been making payment on it, I don't know how the hell to get out of it. And that's affecting because I'm not really using it. That's affecting my credit score too. So how do you get all the stuff like that?
So the student loan, we would have to look at your account, and then we'd have to potentially look at their particular account as well too, just so that we could try to get that out of your name. So that loan, that's just being able to review your credit report and then potentially their credit report to discuss some different options. It's not a situation that we haven't seen before. It's just not typically a black and white situation, just because it's not just solely dependent upon you. There's other people or other parties as well too. So I would say first we would have to view your profile and see where they are. As far as the timeshare, that varies as well too, just depending on what your agreement was with whatever you got the timeshare was. If it's still an active account, if you've closed it, if it's or what kind of status it's in. So I could answer based on the student loan if you submit your information, but the timeshare would depend on seeing how it is reporting credit wise. But as far as closing it, that would be dependent on your particular agreement with that particular organization.
Got you. Thank you so much.
Welcome. You're very welcome. All right, it looks like, let me lower the hand for Kamala. Give me 1 second. And it looks like Gina is next.
Hi, how are you? It's Jenna.
Jenna, my apologies.
No problem. I get it all the time. Nice to meet you. Thank you very much for all of your help. I've been diving into a lot of this already. And so a couple questions from your perspective, your experience is one on my personal credit. Yes, I'm continuing to update that. I did have a charge off that has now been turned into a profit loss. That says for profit on the report. So I know there's a way to write the letter that indicates you can't keep this on here if you've claimed, if you've turned it into a profit loss. And I didn't know if you guys help with that or just, guide on that, just to make sure I am sending the right letter if I were to obviously work with you. So that's one question. The other thing is so I know it's that and the utilization that's keeping my score lower. And my utilization, what I was intending, and this is my question, do you offer business funding with no personal credit check, right? So I know there's ways you can build your business credit and then use just the EIN without, and certain, not all banks, but certain banks, certain organizations will not ask for a social or look at personal credit at all. So do you guys work in that arena as well, so that I can move some of the utilization, which to Christina's point, I'm using for some of the business, which is why it's kind of maxing out a little bit. So which is throwing my personal score down. And I want to transfer that balance to the appropriate purpose, which is with the business. But I just had never learned how to build the business credit, like the PAYDEX score. I just never figured that out early on. And so now I'm learning that. And I just want to make sure there's a potential for organizations that don't use the personal guarantee, personal social, et cetera.
Phenomenal question. So let me answer the first question first, and then I'll break down the second part.
Awesome.
First question is we do have a lot of resources if you are dealing with charge-offs and collections. Even though they may be reporting, and it's great information that about the profit and loss and kind of the statements that are there, but that's one of those nuanced things that it really depends on each individual client and how it's actually reporting in that section for the different violations. So we have a lot of resources. Collections and charge-offs isn't something that we're not, that we don't have the resources to address. I just wouldn't be able to advise you how to address it just because we can't currently see that information. But yes, it is absolutely possible, especially when you understand the documentation and how it's reporting, in order to dispute that and get that taken care of. So that's the first thing.
Okay.
You have to view your information. As far as business credit and leveraging the EIN, yes, absolutely, that is possible. Now, the reason I say that in the beginning, this is general information that we go through, is because it's possible, but most people's business credit is not strong enough in order to go and get financing on their own. So there's a couple different processes. We talk about personal credit. There's a difference between personal credit, business funding, and corporate credit, which also corporate credit can be trust credit as well too, right? So it really works like this. You set for most people, just because they don't have strong enough business credit, they have to build up the business credit so that they can access funding solely under their EIN. So the process that we go through, it's kind of like co-signing for a car, right? So when you establish the personal credit, you establish the personal credit as the foundation, where you PG or co-sign for the business, right? Now, we're strategic in this because you choose business funding that does not report to your personal credit and is completely separate, right? So that's the first thing, so that you're not penalized for leveraging, your credit in order to build your business. Now, what happens is, over time, as you start to build your business credit and you manage those accounts well, those accounts will report to your business credit, which eventually makes the business credit profile in that EIN strong enough to go and get funding on its own. When a business is able to, when a business or a trust or an entity has established strong enough credit under their EIN where you don't have to do a PG, that's what's called corporate credit. But we use personal credit to establish business credit and access business funding that doesn't report to the personal. You utilize it, you manage it well, and then as you manage it well, then you eventually get to the point where you establish enough credit under that EIN, then you're able to just get funding solely on it. So it is absolutely possible, but it is a process in order to get to that process so that the business profile is strong enough to do so. Does that make sense?
Yeah, totally. And I just want to make sure if we, have a conversation or work together, that we can move into that business, like build the business credit, right? I want to make sure that that's my priority, because I've been studying how to do the personal and I get that, but where I get stuck is, how do I expedite, the PAYDEX score, building the business with, and I know Christina just sent us an email with all of the trade lines and things like that to use to build in order to do that no PG part as well. Because again, that's the anonymity that I'm looking for. I don't want my name on everything. That's the whole point of my trust. And the whole point of me setting things up in Delaware or Wyoming is I don't want to be on these I want the entity called the trust or the EIN or the LLC or whatever to be the one that's getting the credit. And so that's what I just wanted to confirm, that that's how you can help as well.
Yes, absolutely. And then one of the things, the document I believe that she sent you would have had what are called vendor accounts associated.
Trade lines.
Trade lines are different tiers of vendor accounts.
Right.
One of the thing on the recording, though, I just want to make sure it's clear too, is like, even sometimes on those vendor accounts, it's not uncommon for you to have to PG in order to get the vendor account, but you do it on, again, some of those smaller accounts to start to generate that score. So again, eventually you can graduate to it. But yes, everything we do is really business credit wise to set the foundation so that you can eventually grow to corporate credit after you build up your business credit profile.
Okay, awesome. All right, thank you. Appreciate your help.
Absolutely, you're very welcome. All right, it looks like Lola is next.
Hi, Mr. Dorsey. How are you?
I'm good. How are you?
I'm good. Thank you for asking. Actually, Jenna asked the question that I was going to ask. Very similar. I can relate to her situation. First of all, I want to say thank you. The lesson that you gave was very informational. But I'm in the same situation with Jenna. We have a startup of a business. We used a lot of our personal credit. I think we were able to obtain maybe about 40,000 on our personal credit, and we want to kind of move that over into the business credit. And so I'm knowledgeable about the personal credit, but just want to see how would you recommend, what strategy would you use to clean up the personal credit and move it over to the business side? And I definitely need to learn more about the profit and loss, because the utilization is very high on those credit cards that we have now on our personal credit. Obviously, it's a startup, so the business is not making as much as expected. And I just want to know, what strategy would you use in that situation?
Phenomenal question. So very common circumstance for a lot of people. That there's a lot of different strategies that we can utilize. It really comes down depending on kind of what goes back to really understanding how your credit report looks like for each individual credit reporting agency for one, just to determine what potential bureaus we could use or what potential products we could use. I will say though, as long as if there is some like negative information, we would need to address that first. I will say though, if there's no negative information and it's just utilization, utilization is one of the easiest things or the simplest things to deal with whenever going through the funding process. There's a lot of different strategies or products that we can use to do so. It would just be, as of right now, I wouldn't know just because I don't actually see the information on your report. So it'd all just be hypothetical. And hypothetically, there's just a lot of different scenarios that we could do. But the benefit of it is like I said, we do a complimentary audit. So if you submit your information on the link from in the chat, we'll actually be able to walk you through that process where we can actually see that. And then once we see that, then we can discuss, hey, this is what you can do moving forward, or this is what we have to do in order to put you in a position so that we can move forward with funding. It's just, as of right now, I just don't have enough information specifically. And with funding, it really comes down to very specific information, just because generally there's a lot of different nuances that different paths could go. Does that make sense?
Yes, so that does make sense. And I do have another question. So
Okay.
do you recommend going through setting up the trust and everything first prior to moving into your program of obtaining the funding?
What I always tell clients, it's a timing thing, right? So it's not necessarily whether it's the trust has to be created or the business has to be established first. I typically tell clients, go ahead and get started now and kind of see where you are, because there may be some things that we have to do, whether credit-wise or structure-wise, or different things that you need to prepare for. So for example, a client may wait a month or 2 or 3 months or whatever time it takes to establish their credit. And then they come to us assuming that they're ready to go immediately. But then we may have to do some things to get them structurally or credit-wise ready for funding, which could take an additional, 30 days, 60 days, 90 days, whatever that is, depending on their particular situation. So my best suggestion is be proactive in both. That way you can be taking the necessary steps to make sure that you're ready once that trust is actually established or those businesses are actually established. Does that make sense?
Yes, it does. And then my final question is, I know you said that you all do not get paid until we get funded. How is your fees based? I'm sorry, go ahead.
No, phenomenal question. So it's going to vary on the funding program. So I went over, like I said, for this particular call, I discussed a lot about credit-based programs, which are primarily 0% business credit cards and business lines of credit. So for that particular program, the way that we work is we're a performance-based organization. That means we don't charge any fees up front in order to manage and take you through the full funding process. The way we work is we take you through and get you access to the capital. After you get access to the capital and products that you're looking for, you receive access to the funds first. And then what we do is we just simply earn a performance-based commission. For us, our fee is just a 10% performance-based commission of the total amount funded. So we take you through the funding process first, you receive access to the funds, and then most clients, generally, not every client, but most clients, once they receive access to the funds, they just use the funds that we got them in order to pay us or compensate us for our services.
Okay, so your services is 10% of the amount funded.
Correct.
Did I hear that correct?
Correct. Yes, ma'am.
Okay. Thank you so much.
Absolutely.
I appreciate you
You're
answering my
welcome.
question.
Absolutely. You're very welcome. All right. I've got there's 3 more hands. I've got 5 to 7 more minutes. I would love to try to get these last 3 hands covered. I apologize if I mispronounce your name, but it's Miss. Oh, I don't even want to do it. It starts with a Q, Q-A-I.
It's actually Quasia. It's Miss Quasia Quay.
Okay.
I gotta change it. I'm sorry.
I really don't want to mess this up.
It's old. I gotta change that. But I really wanted to just piggyback off of Jenna's question. Honestly, it's the same similar question the last 2 women had, because like I said, I have my personal credit and it's horrible, but I wanted to know the same exact thing as far as if I can just solely focus on business credit, and achieving funding for business credit. You see what I'm saying? So I feel like you did a really phenomenal job at answering that question. So I don't feel like you need to really repeat yourself. But I did want to say thank you for all the information that you shared today. You're very knowledgeable, and I would definitely want to get with you as far as working with you. But I think right now I should focus more on building the business credit, or I guess learning how to do that. I don't know how to start, and so I guess that would be my question to you. It's like, is it something I can start on my own, or do I need assistance with being able to start out with building the business credit?
Phenomenal question. So anytime someone asks me a question, I can't really tell you what to do. I just always make a scenario, right? Like,
Okay.
the thing I always say is, we can learn. If we don't know how to build a house or repair a car or buy a house, we can absolutely do it on our own. Is it best practice to do it on our own? In my opinion, no, right? And so the thing that I'm always a huge fan of time and mentorships. So there's certain things I can learn on my own, but I prefer to fast track by accessing certain information resources in order to help my situation. Now, to clarify, just as the previous lady mentioned, is that Christina should have sent you some vendor accounts. If you're going to begin to establish business credit there, you don't want to use your personal account. That is the best way, the best route to do so. But I just want to clarify, even on a lot of those vendor accounts, your personal credit is going to come into consideration in order to build the business credit. So there has to be some kind of way, whether it's personal credit, whether you leverage your personal credit in order to PG and fast track funding, or whether you do the PG. My personal experience, this is why I talk about establishing the credit first and then to go on to get funding. Because let's just talk about vendor accounts, especially if you have credit issues or not established business credit. Most vendor accounts are going to approve you from somewhere between $500 and $5,000, depending on the different vendor, depending on their services, right? So it's just going to take, and sometimes you might get a $100 approval or a $500 approval, right? And when we talk about comparable credit and comparable business credit, establishing a score is important, but those comparable credit that I talked about earlier is important as well too, because what we focus on is not necessarily score-based, it's profile based. So you can go the vendor route and you can do that route. It's going to take you a little longer, especially if you're not leveraging your personal credit the best way in order to get some of those higher limit vendor approvals. Because let's say you go through a best case scenario, you get 5 to 10 business vendor accounts reporting to your personal credit. But if you don't have high limits with those vendor accounts, and let's say you have $1,000 limits, then when you go and get business funding, it's going to be comparable for those $1,000 limits. So you can do it, absolutely. It's just a little bit of a time thing. That's why, me personally, I advise my clients to establish their personal credit, get those higher limits of funding, and instead of going to getting 500, 1,000, or really best case scenario for a lot of those vendor accounts, $5,000 approvals, let's go get some 10, 20, 50, $100,000 plus. Let that establish on that business credit for about 6 to 12 months, and then you can go get much better comparable limits. So I hope that really answers your question. But that would be my opinion based on my experience.
Okay. You broke that down so nicely. Thank you so much. I'm glad I asked you that. So I guess what I'm just going to do is focus on my business credit, because it looks terrible, but I've been learning about how to, discharge debt. And I feel confident that I can just discharge the stuff that's on my account and then just focus on building it up, as you had said. And so I'm going to start there and take your advice. So I really appreciate you, like I said, breaking that down. And thank you so much for your time today.
Of course, you're very welcome. There are 2 more hands raised. I've got like a couple more minutes. I would love to answer these questions. Actually, it looks like there's just one. My apologies. Laura Chapman, you have your hand raised. If you could ask your question, I would love to help you.
Can you get funding with a DBA or an EIN tied to a sole proprietor?
Yes, you can. You can. It is possible to do so. You can do it, but you would look more professional to banks to have a separate entity that's not tied to a sole proprietor. But yes, you absolutely can, as long as you are, a sole proprietor and you do have an active EIN, yes, you can. It's just not best practice, but yes, you can do so.
And then lastly, if you were to like say open up a new LLC and today, how long do you think, and my credit, the only reason with my personal credit why I'm trying to move away from it, COVID happened, lived off credit cards, still working on paying those off. Utilization's not the greatest. I had some missed payments from back then, but my credit score right now is a 650. However, if I was to start an LLC, how long do you think it would be if I went to like do the no doc loans? Do you think I'd still be able to get something, or is it a situation where it's just like you're not going to be able to get anything unless you get your credit score and all of your profiles, everything that you mentioned, no derogatory things?
Phenomenal question. So that's a great question. The first thing I would say is don't make any assumptions. I know you might have faced some challenges back then, but don't make any assumptions just because oftentimes things that happened years ago, they don't necessarily always affect you today. So I would say like we would need to see your credit report to see what kind of strategies there are for there. The second thing is that for no docs, it's kind of like what I mentioned earlier. So you get no doc by funding by establishing the credit reports correctly and positioning your business to be presented more professionally. Because the more professional or credible you present it, the less verification they have to do on the back end to verify your legitimacy. So that's why we do a lot of the foundation for personal credit and business credit, because those are the best ways to access no document-based funding, just because you're more credible on the front end. You can do it just by establishing business credit, but it goes back to a second ago. You're going to have to the question previously, you're going to have to use those vendor accounts to build up the business credit over time to get strong enough to have that strong enough profile to get approvals under the EIN and establish those comparable credits.
Okay. Thank you. Appreciate it.
Of course. Was that it?
When you do your applications, because I've worked with a funding person before and they just went and opened up a bunch of different credit cards, and I'm like, I could have did that myself. But I guess the main difference between your company going and opening up the credit cards or applying for the loans and all that is that you actually have the relationship with the banks already. So does that mean that like it's good? Are they seeing for you to have the relationship, but it's my information? How do they know that it's you? I guess that's the question. If it's my like EIN number and all of that, how do they know?
Phenomenal question. So it goes back to relationships. So we have the relationships and we introduce you to the banker. So unfortunately, a lot of people do work with quote unquote funding companies previously. They're not really true funding companies. They're just there's really no strategy to it. They're just kind of submitting random online applications and really just kind of hoping and praying that they get what we get. That is not funding. That is not funding at all. That is something that, yes, you can do on your own. What we do is completely different. So for example, the bankers that we work with, it's not necessarily that I'm co-signing you. We have the relationships with the bankers. So when we underwrite it and we're used to data and the things it takes to get our clients funded. So our bankers know that by the time we send them a client, it's not like any kind of just random person that they just got to submit an application. They're just kind of hoping and praying. They know that we're going to optimize and underwrite that profile to the best of our ability before we send you to them. So the reason I say that's a huge difference, because the most compliant way I can say this, and then I will have to go. The most compliant way I can say this is that every banker is not treated the same. When you walk into a bank and you have those general bankers, they have a more random clientele. They're going to get any person that walks in. They have no idea what their financial situation is. They have no idea what their credit is. They may be credible. They may not. There's different quality and tiers of bankers inside of the bank. So it's, yes, work with a quality banker, at least a banker inside the organization, but it's important to work with a more tiered banker, because they work with a more qualified clientele. They also have a stronger relationship with underwriting. So the reason I say that is because most of the bankers that we use, most people can't access them because they don't have a 6, 7, or 8-figure business. But the relationships that we do, they're used to that clientele. So they just have a much better relationship and kind of a status within the bank. I hope that, makes sense. So there's
Yeah.
not, random. The only thing that I will say is that it changes the expectation to work with us as compared to people who did previously work with other funding companies. A lot of people are familiar with just, hey, I'm just going to submit an online application and get an instant approval. That's not the way with us. That's the only, quote unquote downside about ours, is that it's a process in order to schedule you with our bankers, in order to, again, these are real people, these are real bankers, these are not online, robots. So that's the only, quote unquote difference with ours, is that ours is a little slower process because we're actively using bankers as compared to just submitting random applications online.
Okay, thank you.
Of course. I do apologize. I know that there's a couple other hands in here I would love to answer. Unfortunately, I have run out of time. I would love to see and work with all of you, kind of see where you are and really figure out the first steps to get you funded. Really best steps from here is Christina has put the link in the chat. I've saw a couple times. I would love to answer your questions or, really kind of determine where you are. But best case would be to submit your information. Again, it's a complimentary call. You don't pay for your credit reports. There's no hard inquiries, nothing of that nature whenever you go through our call. And you'll have an opportunity to work with me or one of our team members one-on-one. So I do apologize, I've run out of time. I would love to be here. I do tremendously appreciate all of you. I hope that this was valuable. I would love to see you inside of the community. I would love to see you inside of our organization as well too. And just as a thing, I will shoot a video later today, and I'll make sure that you guys get a thank you from me and a copy of this presentation, and make sure that you guys have all the links. So Christina, thank you so much. 7 Ways. I appreciate you guys so much as always, and I look forward to seeing you and working with you very soon. With that being said, I do have to go. I wish you much peace, happiness, and success and abundance, and I will talk to you all very soon.
Thank you, Dorsey. We appreciate you so, so, so much. You're the best.
Appreciate you. Thank you. Bye.
Bye. All right. I'm just so excited because that was just a wealth of information. Like when I'm on the other side of things where I'm the, student just chiming in, I'm like blown away. I'm like, oh my gosh, just so much that, that we don't know, and we can just implement all these strategies is beautiful. But Dorsey is definitely experienced, his team too. He has a big team. So they are all very helpful. They've been doing this for years and years and years and years. So they are the go-to person, and they're going to help you from A to Z. So from scratch of you not even having a business. So that's phenomenal. With that being said, I actually want to open up the floor for Q&A. So if you guys have any questions for me based off of the information that we went over today, I would love to answer your questions, and then we can skedaddle because yeah, it's day 4. Yay, tomorrow's day 5, okay? It's like the home stretch here, so I'm excited. Whenever I get so excited for day 4 and day 5. So, but anyways, let's dive into Q&A. So let's see who we have here. We have Miss Kamala. Hey, Miss Kamala. Beautiful lady from New York.
Hi, Christine. God, I always have so many questions. How are you? Awesome presentation today again. Thank you so much for all the goals that you're dropping out. All the information is so cool. I literally didn't know any of this. I mean, the last time when I attended your presentation, I could only attend, I think it was for 1 or 2 days. The other days I couldn't.
So it's just so much. That's what I'm saying.
Yeah,
It's
this
like
is a
being in
lot.
college for a week.
Yeah, this is just amazing. I'm just happy that I'm able to sit down. I mean, I'm sick, of course, but I'm just so happy that I'm able to sit down and go through all of that information and hear everything, because I do have a lot of questions, but I'm just gonna cut mine very short, or maybe I'm just repeating the same questions. I remember at one point when I attend your last meeting that you had, your last class, and I asked you about if you have real estate property out of the United States. How do you deal with that? Because I want to put it into my business. And can you get funding for it? Like, because I'm going to use it as an Airbnb, et cetera, et cetera. So, I mean, can you like put that in your business trust, and then probably get funded for it through getting credit, like money to fund the property, fix it up, do whatever you need to do, et cetera, et cetera.
Okay, so that's a very interesting question, right? So for example, so where's the property, right, that you're talking about? Have you
The,
acquired already?
the property is in Panama.
Oh, in Panama, the country,
Yeah.
right? Oh,
Yes.
all right. So it depends on Panama if you're able to use your business trust. Okay. So you have to obviously look at the laws over there in Panama to see, what their jurisdiction is and if they allow international trusts to own.
Mhm.
Okay. So that's the first thing. The second thing is as far as funding goes, I don't know if you can use, so I don't know if you can get funding here for that specific real estate, right? I have heard of it from mortgage people, but I really do not know if you're able
Okay.
to get direct funding. But what you could do is what Dorsey was teaching, which is you can get general business funding and then use it, right? So that means that
Okay.
you get the general business funding, 50,000, 100,000, whatever you qualify for. And then that 100,000, once it's in your business, you can use it for whatever expenses that you want. So if you want to use it to go renovate that property because it's an Airbnb and it's an investment, absolutely. So what I'm trying to say is in Panama, I'm not sure if you can get funding in Panama. Okay. So as
Mhm,
far as
mhm.
state business funding, right? Because some countries do. I'm looking at a country right now and they actually provide funding for brand new businesses. So
Okay.
so it
Okay.
depends on that country, but as far as what you can do over here domestically, yeah, you can use your general funding, right? You use it for what you call working capital, and then that
Okay.
working capital can be whatever you want. So are you acquiring an investment property? Are you renovating an investment property? Are you getting it up and running and up to par for Airbnb? Absolutely. Another thing is that I'm going to make an international trust available for you. Okay. I just need a little bit of patience in order
Okay.
in order for all of the T's to be crossed, in order for all of the I's to be dotted. Okay.
Thank
So
you.
with that international trust that I'm going to make available for you, you can use it in every jurisdiction. Okay. So you can use it here in the US, but I don't recommend that you do, but you can use it in Panama, South America, Central America, Europe. Okay. So I'm going to show you the different steps that you need to take for offshoring, but we're not there yet.
Got it. Thank you. Thank you so
Oh,
much. That was my question. Thank you.
and feel better, Miss Kamala. I think that is divine that you got an opportunity to rest. That's how God works, right? So like in a position where it's like we're going, going, going. It's like, no, it's now.
I'm just like
Yeah.
you. I'm like the crab in the barrel. I'm in the health field too. And when you're in the health field working at the hospital, it's nonstop. It's literally nonstop. You
No,
have your every other weekend off if you're lucky, and they always want you in to do overtime because people are always calling out. I feel so burned out. I got COVID from work, and that's how comes I end up being home for a week. So, but
I
it's what it is.
I know. It was very challenging when I was working in the hospital. I worked in the hospital from 2013 to 2020 when COVID I left the hospital 4th of July 2020 and like when I left COVID was at its highest point and I was so pissed off because I was on an oncology floor and they had COVID patients right next door to oncology patients and I was like, "Oh, you
Mm-hmm.
guys
Mm-hmm.
get
Yeah.
everybody out." Like I just hated it. And I was like, no, I need to get myself out of this environment because I'm not in alignment with the way that, the Western world practices their medicine.
I,
And we
I'm
and we
going through the same
were,
thing.
yeah, we were seen as like pill pushers. That's
Yeah,
exactly what
yes,
it
that's all.
is.
That's still similar, still similar. I don't want to wait until I'm 67. Two of my coworkers passed away at 55, waiting until they retire. And they're burned. They're literally burnt out
Yeah,
from the hospital work.
my
So I'm trying to a different way of making income where I could go back home to Jamaica and retire before my time.
that's
That's
beautiful.
what I want to do.
Well, I'm here.
And
I'm here to help, Miss Kamala. Okay, so
And I intend to send you information and call you up and said, okay, I'm stuck here. What do
yeah,
I do?
absolutely, I'm here. I'm here to support you. Okay.
Thank you. Thank
You're
you. And
welcome.
thank you for today's presentation. Great, wonderful presentation again. Thank you so much. I am very appreciative.
You
Okay.
are so welcome. Thank you. All
Thank
right.
you. All right.
Yeah, Jenna. Hey, Jenna. How are you?
Is that me?
Oh yeah, Jenna. Jenna, is that your name?
Yeah. No, I didn't hear it. I didn't
Oh,
hear
okay. Yeah, I like the purple though. Purple is my favorite color.
Thank you. I was like abundance, right? Like
Yes, I
prosperity.
know. Yes, I love it.
Good
Like
to know. Purple.
I walk around randomly with like amethyst in my pocket and stuff like that. That's my thing. So,
Yeah, and I love how I can like change it, you know.
oh, that's nice.
So okay, great day. Yes, we're on a roll here. Real quick, so on whatever we were doing the minutes and all of that. So the details in the meeting minutes is quite robust. So I was like, how would a secretary know to put all that info in there for banking? So I'm just curious if you have templates or just use ChatGPT for some like minute explanations.
We do have general templates, but it doesn't really have like the verbiage.
Yeah,
It's
that's what I
like
mean.
yes, it's really it's very generic. You can use it for like appointing your board members, or you can use it for like documenting that you're gonna like acquire assets. So it's inside of the course,
Okay,
and you can find it in the resources tab. So if you go inside the course and
gotcha.
scroll all the way down to resources, you click there, and then you'll be able to see the board meeting templates.
Okay, that'll help. I was like, how is she gonna know what to put or whatever? And then can you have the board meeting, like the bank account or any of the meetings, period, before the trust is notarized, just because I have a little bit of a timing thing going on? Say,
Before
like,
the yeah, so yeah, you can have a meeting. So you can document that you're having a meeting for the entity before you notarize it,
okay,
because as long as you have the establishment date and then you have the meeting, the notarization date could be any other date after that.
okay, got it. And then, oh, I got confused on the promissory note. Like, you like just skipped over it really fast. The state at the top of the promissory note. I know you're using Florida as an example. Is it the trust virtual address state, or is it my personal? I'm California where I live, and then my trust is not going to be here. So, like, which address at the top of the promissory note?
So you should use the trust information.
Use the trust. Okay. And what accounting software do you keep up with all this?
Hey, it's called QuickBooks.
QuickBooks?
Yeah, and I use
Okay.
Excel too. So I started off in Excel. I still use Excel,
Yeah.
but now I use QuickBooks. So
Okay.
I use both.
Gotcha. That's what I use. All right. Perfect. Just wanted to know.
Yeah, absolutely.
Picking your brain. All right.
Yeah. All right. Thank you,
Thank
Jenna.
you, ma'am.
Awesome. All right. Next we have Derek B. Derek, how are you?
Hey, what's up? So, two questions. Um, I think you mentioned this before in terms of how can we check business credit. So I've got a couple LLCs, some new, but then one's about 4 or 5 years old. Is that LexisNexis, or because I don't know if it's established, like I got a DUNS number, but I don't know if it has established like business credit in it.
Oh, okay. You can use nap.com,
Nah,
and you're able to check your business credit.
nah. All right, got that done. And
Yeah,
then
NAV.
Nav and what?
Yeah, NAV.com.
Okay, cool. I'm on it now. And next is once everything's filled out with our trust documents, we should just, I mean, they get filed through the courthouse through probate, or how do we file? Where to go to officially file everything?
So your trust is private. You don't have to register it. You don't want to register it because then everyone is going to know the contents of your trust. Okay. So once it's notarized, it's legal, you start operating. So you want to start opening up your bank accounts, funding, and placing assets into the entity.
Perfect. Thank you so much.
All right, Derek. Next we have Laura. Hey, Laura.
Hey, sorry, I was eating. Okay, so
I want to eat too.
I'm sorry.
I'm gonna order some cauliflower.
Oh yes, fried cauliflower wings.
Yeah, I'm plant-based, you guys.
Me too.
Yay, I love it.
We're in Atlanta, vegan wings. My husband picked me
Yeah.
up some.
Oh,
Anyway,
vegan.
yeah, vegan wings in the Cascade area. Delicious.
Okay, thank you.
Anyways, so one, I wanted to say to Jenna with the formatting, I've done this before. Have, just general notes taken from the meeting, and then you can just, you don't have to necessarily use chat GPT, you don't have to put the name of the trust, but just say that you're making trust minutes, use this information and format it, and then it'll give you all the cool legal jargon and make it look professional. So I've done that.
Oh my gosh, I freaking love
Like
you. This
scratch
is
notes.
why we have a community. Look at this brilliant woman. And you know what's crazy? Because my best friend, she uses Chat GPT for everything. She's like, pretend like you're an attorney. And what is the verbiage that you're? I'm like,
I do too.
what? Oh, listen. I'm not gonna say Chat GPT because I don't use it. My team uses it and I love them so much. But girl, thank you. Oh my gosh.
Can I just add, ChatGPT started to coaching me. It started coaching me. Like I was having I'm an emotional coach, an emotional mastery coach. So I was asking like these questions and it's like, what would you really, like it started asking me how I felt and everything. I was like, oh my, we're getting deep now. But you can ask it anything.
Yeah,
oh my God, I love it.
Pretend as if you are the secretary to the Rothschilds.
Yes.
Or like the trust advisor or financial advisor, like specific people, you can actually tell it to act as if they were advisors to specific people to be able to get that type of advice. And you can upload templates to a template for your minutes. You can upload that, say, analyze this template, and then here are my notes. Put my notes into this template in a way that sounds professional. But
it's my go-to. I love it.
Wow, this is
but
phenomenal.
my question
Wait, I just want to say this is why it's so important to be in the room with like-minded individuals. Like, look at this techie smart stuff that you guys are talking about. Like, I didn't even know that AI could do this for you. And I know AI is like big time, but it's like, oh my gosh, you're like cutting down your workload by more than half. It's insane. Oh my God.
Please tell me, are you recording this? Is this being recorded right now? Because I
Maybe
love
not.
this.
Maybe not.
Oh no.
I'm kidding. No, all of our sessions are recorded. You never have to worry about it again. Just so you have to you know how to access the recordings?
I don't. That's why I was asking. I did are the recordings on the board, right?
Inside of the portal. So where you have the course, there you should see two of them. You should see workshop recording.
Okay, so no, then I do. Okay, then I do. I was watching some last night. So, and I seen the ones where you first started when I was like, oh my gosh, I just had to say thank you because you were talking about things that you're going to be bringing, more to the course and teaching more of. And I am just so excited to see how amazing this is going to evolve. So I'm really excited, but I can't wait to ask my questions. So I'm going to mute myself until the other person is done.
Okay, thank you. All right, Laura.
So my question is, with the promissory note, you mentioned at the top that you're saying that the trust is borrowing money from you, which is, in my mind, I'm thinking, so like if I've been paying for things that the trust should have been paying for, then this is when I would use this promissory note?
Absolutely, yeah, because the trust is starting with zero, right? It's starting with nothing, right? And so it needs some type of, foundational capital to use. And so we always end up putting our own money in there, but we never structure it in a way that it's considered a loan and we're going to get paid back. So the way that you don't want to do it is by pouring in your money and not getting paid back, right? So you want to document whenever you're giving money to the trust organization for the trust to utilize it as working capital. And then if you want to put interest on it, some people don't, I do, right? Why not, right? The trust is now bringing in income. It can cover an interest. So then the trust is going to pay you back. So absolutely. Yeah, that money, that initial money that you're putting in there in order to build up the trust from scratch, from the bottom, from, from zero, you should get that back.
So then, hypothetically, if I was to have created a trust last year, say for my husband, who's a pilot, and he's been pouring in all this, tens of thousands of dollars towards becoming a pilot, licensing, flight rentals, all this stuff. Could we make a promissory note saying that those purchases that he used were him letting the trust borrow money from him and him acting on behalf of the trust to pay for that stuff, but they borrowed it from his personal account?
Okay, so I mean, that's a very unique situation. So are you saying that your spouse became a pilot for the trust organization? That's why
So
you went through the
our
training?
goal is actually to have to revolutionize flights for the conscious community. So he is training to be a pilot in order to be able to eventually get a fleet of jets. We offer those to people like y'all, who get it,
Yeah, oh my God, listen, do you know when I visualize about like being on a private jet? It's crazy, girl. Like,
yeah. So like I said, that's
we're
what we're working
connected.
towards. Capital has been what's been holding us back.
I know, because I always have to take, American, Southwest,
Yeah,
Delta.
and then get held up in the airline and have your stuff missing, and it's just not a fun deal.
I know. I travel every 6 weeks, so I just want to get to the point where I'm up there that I don't have to go commercial.
Exactly. So,
But you know what? So if it's applicable, if that training is applicable with your trust organization, absolutely. So based off of what you're saying, it sounds like yes, it's in alignment. Absolutely. Absolutely. As long as so you just have to structure your trust organization that way, or if it's already structured that way, that
we
it's
just
doing
haven't had anything notarized. We did the thing where you had the 2 signatures, but I'm seeing that needed the
okay.
notarizations. So that's the only thing, because we had it was higher vibration aviation. And so I was nervous because I'm like, okay, well, we've been working this since last year, but if we get it notarized this year, they'll be like, I don't know if they're gonna be like, well, why you didn't do this, or why didn't you have a bank account before? Because we weren't thinking like
But
that.
it's not required. It's not required for you to have a bank account. It's not required.
Oh, okay. Okay,
Not
cool.
required. So how does the trustee want to dispose of the funds? You could put it underneath the mattress, my dear.
Exactly. So
Yes.
that's what
This
I'll do.
is
And then the other thing, if the trust is borrowing from the trustee, when you signed on your example, you had your name as the trustee and as the signer for the trust. Won't that look weird?
No, it's in the trustee powers. It's inside of the contract. So it doesn't look weird. So you are the authorized signer, right? For the entity. So you have to sign. It has to be your signature. You're the trustee.
Okay. Should I put TTEE afterwards though?
Yeah, absolutely. When you're signing, yeah, absolutely.
Okay.
So whenever you're signing, you're gonna put your signature, and then you're always gonna put as trustee. You can shorten it and put TTE, but as trustee of, and then you're going to put the name of the trust. So for today's example, I would have put my signature and then as trustee of Mars Holdings.
Okay. Awesome. Thank you.
You're welcome, Laura. Yeah, I think you're doing big things. I'm excited, okay? And I'm ready. Whenever you guys have the private jet, just let me know. I'm in alignment with that. That's what I'm talking about. Like-minded individuals.
Way go, Christina.
Oh, Miss Sonia, she's so funny. Okay, thank you.
Christina, I'm gonna get all my stuff together. I promise you. We go. I'm gonna call you. I'm ready.
Do you have a passport, or when are we going?
I got a passport. Yeah, I'm talking about
Okay,
finishing up
let's go.
my trust. Yeah, but
Okay, let's go.
I like that lady. I got fired from my job, so it's a good thing. I'm ready. I'm rolling.
That is a blessing, and
Yes.
that is divine. Okay, that is
Yes.
You know how they say rejection is God's protection? That's the truth. So if you're not going to fire your boss, then God is going to be like, okay, well, your boss is going to fire you.
And I
So,
received that too.
yeah, that's the truth. Trust me. Oh my
Yes.
God.
I'm gonna call you. I'm gonna call you next week. I'm busy this
Okay.
week. So next
All
week
right.
I'm gonna do a one-on-one.
All right, Miss Sonia, call me. Don't call Tyrone, okay? He don't know nothing. Call me, okay?
Okay, I got you.
Oh, okay. So next we're gonna go with Miss Quay.
Hey, girl.
Hey, girl.
So two things.
Yeah.
I wanted to know, where do we go to get the forms to start? Because I didn't get the email with the forms. Um, yeah. I know I did put my email the first day, but like I said, I never did receive them. And so my husband and I wanted to start working on doing the trust and, getting everything set up.
Did you guys
Christina,
check
can I
spam?
say something, Christina? Can I
I
say
did
something right
check
here?
spam.
Yeah, go ahead.
I think your assistant sent them in her name, and I think everybody was looking in for your company or either your name. So I think if you give
Oh,
her the name of the assistant, what's her name? Asia.
Yeah, it's Angelica. So
Angelica.
yeah, so it's Ica. You'll see it under Ica.
Yeah,
You
she probably
so,
has.
yeah, you
Could
go
you spell that for me?
yes. So you can also, if you put in the company name, 7 Ways to Wealth, it should like pop up
Okay.
because that's the end of her email. But I'll put
Oh,
her
okay.
email in there. So if you want to
Yeah.
search her email in your inbox,
Yeah,
another thing that a lot of the times it goes to spam. So
okay. I'll
might
check
be in
both.
spam. Someone told me on Monday that it went to their promotions folder.
Promotions. Okay, so yeah, I'll take her email too.
I'm gonna put it in the chat right now.
Okay.
That's how I found it.
.com. I also have a new email, so I'm gonna give you guys my email as well.
How do you save your notes on the iPhone? Anybody know how to do that?
I don't know.
Because I've been copying.
All right.
So is that both the emails? The support way,
Yeah,
the
so
support.
support is her, and then Christina is me.
Okay. So then that's that. Okay, the second thing is, okay, I wanted to know, what are you using for your to host your master class? I only ask this because I'm actually in the middle of creating my own for another business that I have, and I wanted to know, are you using Kajabi?
No, we have our own software. So it's called
Software, really?
yeah, we have our own software. So the name of the brand is the School of Bosses, and we teach you how to set up everything.
To
So
host your own course?
yes.
How do I get in touch with you about that, please? And thank you, because I was gonna go with Kajabi, but the issue is when it comes to my business is we're high risk because of the business, the I want to say because of what we're selling. So a lot of payment processors don't want to work with us because it's in the smoke accessories industry. And so I actually teach people how to make resin art, and I blew up on TikTok and on Instagram. And the latest video hit 28 million views the other day. I'm so
8
proud.
million.
28
God.
million. Yes,
Oh
I've
my
been
goodness.
mastering social media, and so I'm a professional at the studying algorithms. And so yeah, so I like I said, I've been having trouble with trying to find someone to host my master class, and I have thousands of students waiting for this, and they've been waiting for a while, and I feel so bad, but I already went through Beacons and they denied me because they were like, you're too high risk. We don't want to work with you. And I just fear that I will go through the same thing with Kajabi. So that's why I'm like, I need to come ask Miss Christina what she's using.
Oh my God, Christina, that is boy. Ooh, God got his
Oh.
hands on you.
He's so funny. Yeah, okay. Well, we need to have a separate conversation about this. So
Okay,
put
okay,
the link in there, but also send me an email.
okay,
You can also text like the number, and then
okay.
I will, I'll show you the ropes, my dear.
Oh, thank you so much. I really appreciate it. I ain't gonna take any more of your time, so I'm gonna go. But thank you. That's all the questions I had.
You're welcome. Thank you. All right, the next person is Zoom user. I don't know who Zoom user is. You don't have your name on here. Zoom user? No? Okay, next we're gonna go to Paul. Hey, Paul.
Hello, Miss Christina. How are you?
Oh, wait, hold on. I think Zoom user is ready. I seen your camera.
Okay.
Zoom user, are you ready? I saw your camera. I don't know who it is, but you're still on mute. I can't hear you, but I did see your camera. No? Okay, maybe they have to go out and come back in. All right, Paul.
All right, Miss Christina.
Hi, how are you? How are you?
I'm well. How about yourself?
Good.
Anyway, so my question today is, concerning the trust, loan. Obviously, when you start the trust, it start with zero. However, if I will have the trust on the LLC, that means the trust now has or is the owner of whatever funds is inside the LLC, right?
Correct.
Okay, so that means that money belongs to the trust, so I don't need to charge the trust any interest for having the money anymore, right?
So
How does that work?
I'm not into like commingling funds, so I'm not going to say that the money belongs to the trust, right? The money belongs to the business, and you
Right.
can allocate a percentage of it to the owner, right? So whatever
Okay.
that percentage is, you can have owner draws. Those owner draws will then go to the trust.
Okay.
So yeah, so you're able to move money from the LLC to the trust. You don't have to document it as a loan. So you only want to, if you're not doing it that way, so if you're moving money to yourself or probably also to another entity that is not like the direct beneficiary, or if it's not a distribution or a contribution, then you want to do it as a loan.
Okay.
Mhm.
Okay. And when I, let's say I'm the one loaning the money to the trust, obviously when I'm getting that money back, there's not gonna be any taxes, right?
Correct.
Okay. Perfect. I think that's the only question I have for you today. Thank you so much.
All right. Thank you, Paul. Thank you so
Thank
much.
you. Yeah.
All right, next we have Ms. Dina. Hi, Ms. Dina.
Oh, hello again. I had a situation where you know how the login credential, you give us the link for that.
Yeah.
I went to a couple of mine, and each one I keep going to, it keeps saying no courses found. No courses found.
I'm not sure, but I will have the team reach out to you so that they're able to assist you with your login, okay?
Yes, I appreciate. Thank
You're
you.
welcome. You're
Well, yeah, I'm
welcome.
having the same issue. I can't find any courses.
No, what you
under
have
the
to
link.
do is that, I'm sorry, that happened to me as well. You just hit up in the upper left where it says 7 ways, and that kind of resets it. And then both of the options are available. I don't know, something maybe online or whatever. It just kind of says no courses, but hit the 7 ways and it kind of, resets.
Yeah, you should see like two. Another thing is I know that people sometimes have challenges with their browser. So it could also be your browser. It could mean that you need to like clear the cache or the cache, however you say it. So it could be like several different things. But I agree with her. If you hit the icon, then you're able to go back to where the page where you can find the courses. But I'm gonna also have the team reach out to you, okay, Miss Dina?
Hi, I am the Zoom user. It wasn't connecting. I don't know why.
Oh, okay, go for it, Britt.
Okay. Hi, good evening, by the way. And
Hi.
thank you for
How are you?
your lesson today. I appreciate it. I'm all right. As it pertains to the promissory note, right? the lender's address, it should be mine or should it be a virtual address as well?
So it should be the address of the lender. So if you are the lender, it should be your address.
Okay, cool. The next thing that I have, so based on the lender, right? That he was based on what he was pretty much like shown us today. I guess I would have to speak personally per my situation to see how best I can go for it. Because with mine, I'm in the military, and since I've been in almost 5 years, I've moved like 6 times. So there's a lot of address on my credit report. In addition, whenever I move, companies like the apartments and stuff like that, they don't want to release us. So sometimes they do things to like mess up our credits. I try like disputing a couple of them. I was able to get a couple of them off because what they do is like they hold us hostage like 2 months, and then they don't tell us. And then you couple months after you find out, you're like, okay, we have to fix it, and then it just goes sour from there. So that kind of messes credit in a sense. Just those tools are the problem that I'm having, but I'm trying to work on it actively right now to get it fixed. But like I said, I will speak to him as it pertains to that. But he was mentioning that we need a website, and you mentioned also that we need a business address, a phone number, and a mailing handling. And I was doing some research as it pertains to ChatGPT, and one of the best companies that I see that have all of those features was Northwest Registered Agent. They're pretty good. I even called one of the agents, spoke to her. She was able to give me some information. For the monthly fee, for everything, it comes to like $50. For anyone that wants to know the information, it's literally called Northwest Registered Agent. And they cater to any state that you're in.
Yes, the RAs, that's awesome.
Can you put it in the chat?
Sure, no problem. There was a next question that I have for you, but I don't even know where I write it. Yeah, I don't know where I write it. Yeah. For now, I think.
Yeah, you can also, if you think about it later, you can just text the community line, the question if you remember later.
Okay, hold on, I remember. So I was at work last night, right? And I was telling one of my coworker about what you're offering. And in the moment, I send your line, the text message line that you normally send us on. I sent you a text saying, hey, this person is interested. You can reach out to them if you like. He's an older guy, so he's not really technology savvy, but he has some business properties that he has, and he would love to, get set up with some trust and some stuff, basically what you're offering. So if you want, I provide you with the information, his information, so you can reach out to him.
Yeah, that's awesome. So I'll have the team send me his contact information. Another thing is that we have an affiliate program. So with the affiliate program, if you sign up as an affiliate and you recommend our program to someone and they enroll, you get 20% of the enrollment fee. So that's, a good way for you to be compensated for you doing something that you're really naturally going to do. So thank you so much for referring us. I really appreciate it. And I highly recommend that you sign up as an affiliate. So you should get the link is inside of your email.
Okay.
And then so we'll be able to tag him as one of your referrals. And then if he ends up enrolling, then we will send you 20%.
Hey, a quick question on that. I wanted to actually ask you that, but I totally forgot. And I'm so glad she brought that up about the referral. So for my master class.
Wait, hold on one second. I just want to finish with
Go ahead. Go ahead.
You.
Okay. I'm excited.
I know, right? I'm excited too. What were you gonna say, Brent?
No, that's all I got for you.
Okay, thank you so much. Okay, thank you so much. So you could find the link in the email, or once again, if there's something that you feel like you can't find, you can always text the community line. So my team is available to be able to respond to your messages either via email or text message and get you the resources, the links, the websites, anything that you need, okay?
Okay, no problem. Thank you. I appreciate it.
You're welcome, Britt. You're welcome. Okay. So, Miss Quay, I'm going to come back to you. I see Tyrone has a question,
Okay,
and then jump right to you. Okay. Hey,
that's
Tyrone.
fine.
Thank you.
What's going on, family?
Hey, what's up?
All is well.
I just told them not to call Tyrone. Did you hear that? No, you wasn't even there.
That was
I
me.
said, call me. Don't call Tyrone.
And
I
family,
did. I said it.
that's
I
probably
said,
why I got on, because I
right.
missed the
I
class.
summoned you.
Yeah,
Okay.
I missed the class today. And
Right.
so
I know. I don't know where. I'm like, where's Tyrone?
hey fam, listen, it's been crazy, family. I've been executing these trusts, and
Yeah, I'm excited.
everything is coming along, family. And I'm really mad that I missed today, because I know you are a big fan of Ally, Bank, but I was just wanted to ask you, as far as the Chase and US Bank. Have you ever
Okay.
have you
Yeah.
ever have you ever dealt with them as far as your trust is concerned?
So no, I have not. So I have Chase Bank, but I wouldn't put my trust in Chase Bank because Chase asks you for your trust account, and I don't like that. But we have community members that have Chase, and Chase has opened up a trust account for them. Chase has also given them a credit card for their trust. So, but they had to go to the extent of providing the indenture because that's the rules when it comes to Chase. So that
Right.
that's if if you want to establish a relationship with them, go ahead. So I personally wouldn't do it for my trust. With US Bank is good. A lot of our community members have it. I don't. So I already told you the banks that I have. I have Ally, Truist, Fidelity, for when it's dealing with trust. Okay. I have Chase when it's dealing with LLCs. So
Okay.
US Bank, our community members do have US Bank. So there's a couple of them, a handful of them that they have nothing but good things to say about it. They went and opened up all three of their accounts with US Bank and everything went smoothly and they didn't have to provide their indenture.
No, that's cool, because I actually have my revocable trust. I had them just notarize it, you know what I'm saying? And of course, they was pressing, you know what I'm saying? And so that's why I know, who your banks are, and I'm definitely gonna go with that. But I just, and I should have just put it in the community chat to find out who has worked with them, you know what I mean? Just find out,
Yeah, they'll tell you.
because I know the day was bank day, you know what I mean? As far as that's concerned. But I'm definitely going to, you know what I'm saying, because I have Fidelity, I have all those banks, my broker's accounts and whatnot are with, but now I'm getting ready to, of course, open up the trust accounts with all of them.
Right.
That's why I wanted to know, because I'm gonna use your Truist, I'm gonna use Ally, you know what I'm saying? Because of course, why not follow you? They already know you, they already know the situation. So why not go there? But I just wanted to add, you know what I'm saying, some other layers to my situation. And so I said, let me ask.
Some people don't want to do online banks. Like a lot of our traditional people, they're like, I need to go in the branch. I need to talk to a human being. I don't want to do all that online stuff. Absolutely.
No, and that's what I'm saying. And that's the difference when we talk about the human people give you all these problems. So I already know. I mean, you know what I mean? The AI, it just wants to hear the keywords. You know what I mean? You hit keywords, they playing with you. If you, you know what I mean? The bank people, they all in your business. They trying to find out what you know and what you don't know. And so
yeah, exactly.
Yeah, so I know that, and I appreciate you, of course. And so I definitely want to just hear your take on that. But I got one statement for the young lady with Northwestern. You know what I'm saying? I have them as well. You know what I'm saying? One of my companies, they are registered in Delaware. I'm registered in Delaware with my name being an LLC. And so they are good, you know what I'm saying? But you just have to be mindful. They penny pitch you with everything, you know what I'm saying? They charge you for everything. So, but they are good. They do what they do. And you just got to know, how to follow up on them, because they ain't following up on you. They just mailing you the information, and then you got to make sure you do your due diligence. But they are good though, just to piggyback on that young lady using Northwestern, for agency. So yes, they're good. So, but you enjoy the rest of your day, darling. God bless you. I'll see you tomorrow. I'm gonna try to make it tomorrow the whole day. You know what I mean?
Okay, we hope so. We hope to see you. Bless us with your presence, okay, Tyrone?
Come on now, you know what it is. God is good, baby.
Yes.
Thank you.
Thank you so much. All right, awesome. So we are dwindling down to the final hour. So we got Miss Quay. How are you, Miss Quay? You say you had a question about the referral?
Yeah, no, I wanted to just ask you if you can put the link to the referral in the chat. And I also wanted your permission. I didn't want to just assume you'd be okay with me referring my students in my master class, because I want them to learn how to be more financial, stable when it comes to how they save and spend their money when it comes to the course. So I want to refer them to you so that they can set up their trust to save as much money from taxes and stuff like that.
Yes, absolutely. You definitely have my permission. I will be grateful to assist your students. So thank you so much.
No
And
problem.
And when you sign up as an affiliate, you're going to get a specific link. So that link is the link that you need to provide to your students if they're interested in joining our program and, setting up their trust. So when you sign up, that link, it actually tracks the people. So so if they click on it, and then they go to our website, they land on our website, then they're automatically going to go into our affiliate program, into the system. They're going to be labeled as your referral. And so then we'll be able to see if they end up enrolling. And then you'll get like a login for the affiliate portal. And there you'll be able to see like all of the clicks. You'll be able to see all of the leads that you have and who end up signing up, and then what commission is owed to you. And we pay every 2 weeks.
Okay, awesome. Thank you. Well, you're definitely about to see an influx of sales. Trust me. Okay, so thank you so much.
That's
Yeah.
fine.
Thank you so much, girl. You enjoy your day, though.
Thank you, you too. All right, guys. So we're wrapping it up. Thank you so much. You guys were fantastic. So we're wrapping up day 4 of the Wealthy Trustee Workshop. So I do have homework for you guys. Once again, tomorrow we're going to be focusing on transferring assets. So please go ahead and finalize your worksheet for your asset inventory so that you can take an inventory of the assets that you have, because sometimes we actually don't even know that we have old 401ks and old brokerage accounts and HSAs from prior, employers. So you want to go ahead and finalize that asset inventory list. So what we're going to do tomorrow is we're going to focus on transferring assets. So we're going to meet here, same place, same space, 11 a.m. Eastern Standard Time. And tomorrow we're going to focus on asset transferring. So we're going to go through transferring your house, your car, and your businesses. And then we have one of our educators that's going to come in and teach you about the life insurance policies and how to use it to eliminate debt and how to use it in order to build generational wealth by earning compound interest with their cash value. So that's what the plan is for tomorrow. Your second piece of homework is for you to book a call with Brian Dorsey and his team so that you can see where you're at. So I saw in the chat, some people said that they feel like they're not ready. That is totally understandable, but you want to be able to get that audit from them so that they can let you know which direction that you have to go. Because a lot of us, we just think, oh, I know I have to get my utilization down, but it might be more or it might be less than what you're thinking. So do the audit at the very least so that you can get the guidance that you need so you can get to the next level. Okay. So book that call with Brian Dorsey and his team. Okay. So I think Jenna has a question and then we're going to close off the Zoom.
Yes, just real quick. Do you happen to have the asset instead of a PDF in Excel or anything?
Oh yeah, we have we do. We have it in Word.
Or Word, yeah.
Yeah, I'm gonna have the team do a blast email with the Word one, okay? So I'll have them do it now, okay?
Okay. Thank you. Appreciate it. Excited.
You're welcome. Thank you guys. You guys have an amazing rest of your day. God bless you, and I'll see you here tomorrow. Bye.
Okay, thank you, Christina.
You're welcome.
Bye.